Hi guys, welcome to the workout of AS19. When you look at AS19, most students get scared and skip it on the face of it because most students don't skip this topic without studying. They will study and skip because they don't understand this concept. If you take other standards like AS 25, 24, they won't even study, they will just skip assuming it will not come. Students will skip knowing this is an important standard, they will attend the class, they won't understand and they will skip. I just want 30 minutes from you, concepts over here. See, this standard basically I will split into three parts. Of course, in our material, it runs into 3 pages, guys, the concepts itself. But I am just going to do one thing in our workout. In 30 to 40 minutes, I will finish the full concepts for you in such a way the standard becomes so easy. And then when we get into the sums in the next 90 minutes after that, all the sums like this, you will be able to do it, guys. This standard I will split into three parts. First is basics explaining what is a finance lease and what is an operating lease. Before that, AS19 is accounting for leases. In that there are two types of leases, finance and operating lease. The most difficult part in this standard for students is this equations. There are so many formulas with some fancy term like MLPs, GIL, gross investment and lease, very fancy terms. Looking at it, people get scared. And then we have some other concepts. Within other concepts, what is important is sale and leaseback is one concept, very easy. IRR is another concept, depreciation and other disclosures. I am mainly first going to focus in removing the fear from you. You are scared of this standard because of two things. You don't know the concept and you mugged up the formulas, and those formulas have some fancy terms. I'm going to make the concept easy for you and make the formulas. Don't have to mug up a single formula. In every other class you go for AS, and I will challenge you guys. You have to mug up all the formulas. So over here, unlike other workout chapters where I'm doing the sum and teaching the concept from that, this topic I can't do that. Where I have to teach you the concept, only then sums will become easy. Okay. Let's take first scenario. I'm getting into a discussion only now, guys. Case 1. Okay. Let's say we will take Pratik. Okay. Pratik has now moved into Bangalore. He's living in a 1 BHK apartment. So Pratik is the tenant, and let's say house owner is somebody in Bangalore, some Bangalore house owner. Okay. This is case 1, left hand side, case 1. Case 2. We have, let's say, Vishnu Priya. Okay, Vishnu Priya, after clearing CA, in the first month's salary, we asked her what she wants to do, gift her parents, gift friends, gift faculties. She straight away went and purchased one BMW car for herself. Self-care is important, others all can wait for second month's salary. She purchased BMW car. First month's salary is not enough. BMW is going to cost in 30-40 lakhs. So she purchased on EMI basis. Therefore, Vishnu Priya will be known as, this is a transaction of hire purchase. So Vishnu Priya is called as whom, guys? Hire vendor, and Vishnu Priya is hire purchaser. Are you following, guys? So she took an asset, okay, car on EMI basis. Keep these two transactions in your mind. Now I will ask you some examples. You will just tell me answers for that quickly for you to understand. Now in Pratik case, okay, this house, guys, if there is any expenses in the house like repainting, changing of the AC, water is leaking, I have to fix the leakage, who will do it? Owner will do it. Are you following? Is correct? Owner will do it. Can Pratik even put one ani and hit one hammer? No, he's not allowed to do that. Correct? Other expenses like cleaning the house, paying EB bill, who will pay that? Pratik will pay. Correct? Now what entry will Pratik pass for paying rent to the landlord? He will pass entry in his books, in Pratik's books, rent to bank. Correct? What entry will landlord in Bangalore pass the entry? Bank to rent. Correct? For landlord it is an income, for Pratik it is an expense. Now this asset, house, will be in whose name? Owner's name. So who will charge depreciation? Owner only will charge depreciation. So entry by owner will be depreciation account debit to asset, building, whatever. Are you following, guys? Now other things, like let's say, that means small repairs Pratik is bearing, like cleaning the house, etc. Repainting, fixing water leakage. Who is bearing that, guys? Landlord in Bangalore is bearing it. Are you following? Keep this on one side. Come to second case. Vishnu Priya bought BMW car from BMW showroom directly from BMW showroom. Now in this case, car tire puncture, car met with an accident, or car, let's say she has to repaint. Who has to bear the expense? Vishnu Priya or BMW? Vishnu Priya. Even though she is not the owner yet, but you are all saying Vishnu Priya has to bear that expenses. Are you following, guys? Whether it is minor expense or major expense, who will be bearing it, guys? Vishnu Priya. Petrol, diesel, Vishnu Priya will be bearing. She's saying, no sir, EV car, electricity bill, who has to pay? Vishnu Priya has to pay. Are you all following, guys? Now what entry will Vishnu Priya pass while paying EMI? EMI. She has to pay EMI. So, but before that she purchased the car. So what entry she will pass while purchasing the car? She will pass car account debit. Forget the value, guys, whatever. To whom? Did she pay? Not yet. She has to pay, pass to whom? BMW, and create a liability. Correct? For her it's a liability. So to hire vendor. My hire vendor is BMW. What entry will hire vendor pass when he is selling the car? He will pass. What entry he will pass, guys? Vishnu Priya, who is nothing but my debtor account debit to sales. Correct? Are you following, guys? So what is happening? Vishnu Priya is creating a liability in her books, and BMW is creating an asset, debtor, in their books. Later when Vishnu Priya is paying the EMI, let's say she is paying EMI of 100, in which 80 is principal, 20 is interest. What entry will Vishnu Priya pass? She will write 2. Bank will be 100. Correct? Interest account debit will be 20, and then she has to debit the liability. What liability? BMW liability account. How much? 80. Are you following, guys? So that liability has reduced when she is paying EMI. What entry will the other fellow BMW pass when he is receiving the money? Bank account debit 100 to debtor. He will reduce the debtor by how much, guys? 80, and then he will consider it as interest income 20. Correct? So for him also what is happening? The debtor is reducing. Are you following, guys? Now you tell me, in this case of Vishnu Priya BMW example, who is the owner of the asset? Owner. EMIs are still being paid. BMW is the owner. In previous house owner example, house owner in Bangalore is the owner. But in previous case, even though house owner is the owner, expenses, major expenses like fixing, repairs, etc., who's going to take care? House owner. But minor expenses like electricity, Pratik is taking care, tenant. But here in BMW case, even though BMW is the owner, minor or major expenses for the car, everything is for Vishnu Priya only. Do you all agree, guys? Common sense. Now depreciation in house example, owner is the charging the depreciation. Correct? In BMW case, who will charge depreciation? Who will charge depreciation, guys? Vishnu Priya only will charge depreciation to asset, because the asset is in her books. Correct? So look at this. In this case, even though the owner of the car is still BMW, because car is in their name, depreciation is going to be charged by Vishnu Priya. Unlike previous case, it was different. So in first case, owner is charging depreciation. In second case, the hire purchaser is charging depreciation. Are you following the difference, guys? That means, can I say, in first case, in the Pratik's case, Pratik is not getting full rights. He is only getting right to use the asset when he is staying there. But in second case, Vishnu Priya is getting the full rights over the asset. She is going to become the owner. She is also bearing the risk. These two transactions you already know. You account this already, guys. Now these two transactions only in AS 19. Left hand side we call it as operating lease. Right hand side we call it as finance lease. They give some technical term. Pratik tenant is called lessee, and the owner is called lessor. Here Vishnupriya hire purchasee is called lessee and BMW hire vendor is called lessor. So this operating lease or finance lease has two parties. The one giving the asset or owner is called lessor and the other one is lessee. So like this, the whole standard is about technical terms which I'm going to break it down for you and give it to you like prasadam. You're going to take it. Are you following, guys? Clear? Understood the basics of what is finance lease and operating lease. Sir, in exam what will happen? I will show that once I finish equation. For whether to classify as finance or operating lease, I can't give story like this. They have given us points, they have given us some conditions. They have given 5 primary conditions and 3 secondary conditions. 5 primary and 3 secondary conditions. In these 5 conditions, any one if you satisfy, it becomes a finance lease. And additionally, just to get secondary security, some more satisfaction, they have given 3 more conditions. Whether you satisfy these 3 conditions or not is only additional, is only optional. But within these first 5 conditions, you have to satisfy at least one, then you become a finance lease. Sir, all 5 not satisfied, sir, then it becomes an operating lease. I am not going to get into those 5 conditions and 3 conditions now that we have over here. We call them as indicators of finance lease. First 5 and next 3. First 5 is called deterministic in nature. Next 3 is called suggestive in nature. I will discuss these 8 points towards the end of the chapter. We have questions for that, guys. Now I want to get into the... So with this I am done with the basics part. I gave you an overview. 8 conditions we will discuss later. Now getting into the most important equations part. Equations part, guys. So for this equations part, what we will do, let's say we have, I'm going to take the same example I always use so that regular batch students can connect with our workout quickly and come for revision, or those who are studying first time also will be able to connect, guys. Let's say Hyundai or yeah, Hyundai company is there, and then we have Zomato. Okay. Now, what is happening? Let's say Zomato is having 1 employee, or you want to change from Zomato? Huh? No problem, it's fine. That's why I'm using same example. I can change Zomato, Swiggy, Akla, Hyundai, or Toyota, Akla. Can I change it, guys? So you will have some difference. Okay. We will just change it. What's there? Swiggy. This side you keep, whom will keep, guys? Maruti. Suzuki. Okay, fine. So let's say we have an employee, we'll have Thiru, who is an employee in Swiggy. He is not delivering and all, guys. He is the manager, regional manager. After Thiru comes to a region, means that region sales will go up. Okay. So now what Swiggy told Thiru, let's say they are saying, please go and attend to some other region. You have already taken over Tamil Nadu. We want you to go to the north. Come on, Thiru. Go to, let's say, Bengal. Okay. West Bengal, you have to stay for next 3 years. Your project is to be in Bengal. Thiru also is happy. Never been to Bengal. 3 years, let him live there and come back. Okay. So what he has done? Okay, he accepted. And Swiggy told, don't worry, we will also give you car in Bengal along with a driver and a house. You can stay alone. So he is happy. West Bengal, he will stay alone. Bachelor life, car, property, house he has, everything he has. Okay. So now Swiggy is giving him the car. From Maruti, they purchased one simple car, Maruti Swift or any Indica, whatever. This car, they are buying it. If they buy it, means they have to pay the whole amount now. Okay. What they are doing, they are purchasing on EMI basis, guys. What are the facts of this case? So Maruti is the lessor. Swiggy is the lessee that is paying the money for benefit of Thiru, one of their employees. If I buy the Maruti basic model car now, I have to pay 5 lakhs. Okay. But I don't want to pay 5 lakhs now. Swiggy is taking on EMI basis. So they are saying, how many years you want the car? Project of Thiru in Bengal is for 3 years. These 3 years he will go across Bengal, and Thiru also is not going to take care of the car like it's his own car. Free car only, no. He will jump in it, he will not clean it, all of that. So Swiggy also said, we will pay EMI for 3 years. Let that EMI be 2 lakhs, 2 lakhs, 2 lakhs. 2 lakhs, 2 lakhs, 2 lakhs. 3 years I will pay the EMI. So cumulatively I'm going to pay how much, guys? 6 lakhs. Are you following, guys? Now, this is like my EMI. EMI paid by Swiggy to lessor. Are you following till here, guys? Understanding? Now what is going to happen? After 3 years, what will happen? After 3 years, Swiggy is saying, I don't want the car. I don't want the car. So, Swiggy will, Thiru also saying, why do I need the car? I'm coming back to Chennai. So, that car will go back to Maruti. I am only taking on a rent for 3 years. The 3 years rent is how much? 2 lakhs, 2 lakhs, 2 lakhs for each year. Are you following? So, after Maruti gets the car back after 3 years, after Maruti gets the car back after 3 years, what Maruti will do with that car? Director will go in that. No, they are going to sell it. That too, Thiru use that car. In Bengal, visualize how that car will be, guys. Okay, that too for Swiggy purpose. For he has to keep traveling. எப்படி இருக்கும் அந்த car? So, Maruti is just going to sell that car and get some scrap money. Okay, so let's say the scrap money they are going to get is 50,000 rupees, which is going to be the residual value of the asset after 3 years. Correct? 3 years old Maruti car for 50k. If you get, you will buy or no? Yes, but Thiru used that is you have to decide. Okay, looking at the car condition, fine. Regular batch now we can discuss more, guys. Avena panna Bengal pa enga stay panna, what he was doing in 1 BHK, but we don't have all that time. Okay, so residual value is 50,000. Recording students, if you want all those stories, you have to come to the regular class. Okay, fine. Now come back to this, guys. Now Thiru is saying, hey, you already paid 6 lakhs. You already paid how much? 6 lakhs. If you pay some more money, the car will become mine. Maruti also is saying yes. The 6 lakhs you paid so far is for using the car for 3 years, not for transferring ownership. As per Sale of Goods Act, ownership can be transferred only if you receive consideration. Correct? Here, I got 2 plus 2 plus 2, 6 lakhs to use the car, not for transfer of ownership. Are you getting it? Then Thiru is saying, ayo, okay, better I will buy the car myself. How much to pay after 3 years? Maruti is saying, see, if I sell to outsiders, now I will charge residual value 50k. But you are my fellow. 3 years you only gave me income. If you want to buy, don't pay 50. Just pay me 20,000. That is sufficient in solra. Are you following, guys? Correct? If you are Maruti, you will offer that little discount, guys. If Thiru is saying, I myself will buy the car after 3 years, Maruti doesn't have the headache of getting that car from Kolkata back to Chennai, finding a buyer, selling. And they are saying, relationship. Maruti means emotions. Maruti Suzuki, how the company became bigger? They don't have any technology. Maruti Suzuki, joint venture. Suzuki is from Japan, correct? It's a Japanese technology. They were not able, first Suzuki came to India. They were not able to sell in India. They didn't know what to do. Then Maruti came. Don't worry. You don't know how to sell in India. In India, emotion is important. I will do ad. Stand in highway. வீட்டுக்கு போறதுக்கு தீபாவளிக்கு வீட்டுக்கு போணுமா? Get in Maruti car. I will put the emotion into Indians. They will buy the car. So same way that emotion is there, Maruti is giving for 20k to Thiru. Are you following, guys? So now the transaction is lessor is going to get Maruti is going to get 2 plus 2 plus 2, 6 lakhs, and will he get 50,000 extra? Depends. Residual value depends whether Thiru or Swiggy is going to take this 20k or not. Are you understanding till here, guys? Understanding till here? Now you tell me, Swiggy is going to pay how much? Swiggy is not bothered about 20k. Swiggy is not going to pay 20k. Swiggy will pay only 6 lakhs. So now this 6 lakhs 2 plus 2 plus 2 EMI in this standard, there is a technical term. Let me go to Swiggy's office. From Swiggy's office terrace, I will look at Maruti and I am going to pay them minimum how much I should pay. 2 plus 2 plus 2. So what Swiggy is going to pay minimum what Swiggy is going to pay, this 2 lakhs EMI is called, this is a lease, it's taken on rent, this is called lease payments. Minimum lease payments that Swiggy is going to pay, lessee is going to pay is 2 plus 2 plus 2, which is 6 lakhs. So look at this. First let me tell you minimum lease payments, which is nothing but 2 lakhs plus 2 lakhs plus 2 lakhs. So what Swiggy is going to pay, look at this, MLP from standpoint of lessee. Who is the lessee in our example, guys? Swiggy. The wording's formula is aggregate of payments during the lease payment. How much? 2 plus 2 plus 2. Are you following till here, guys? Understanding? Now Maruti is telling Swiggy, First of all, this 20k if you pay, they will transfer the car. First option to pay this 20k will be given to whom? Not to Thiru, will be given to Swiggy. First I will ask Swiggy, hey, do you want to pay 20k and buy the car? Only if Swiggy rejects, then the option is open for others. Correct? So now you tell me guys, look at the terms, how beautifully I'm introducing it to you. Now follow very carefully. What is 50k? Residual value. What is 50k? Residual value. This Maruti will get when? If Swiggy is rejecting to buy the car. Correct? If Swiggy is saying, hey, I want to buy the car, give it to me, what price Maruti will charge? 20k. Correct? That means, can I say Maruti will definitely get either 50k or 20k from Swiggy? Minimum they will get this. That means out of this 50k, what is the minimum they will get? 20k. Correct? Out of 50k, 20k they will definitely get, because either Swiggy will pay 20, or if Swiggy is not paying 20, I can sell outside and get 50. So what part of this 50 residual value I will definitely get? 20k. This 20k is called GRV, because that part of 50k which I will definitely get is what? 20k. So GRV means guaranteed residual value. I will definitely get 20k out of 50k. I'm repeating the numbers again and again because I want this to get into your system, guys. Are you following? That means which part of 50k you will not get? I won't say you will not get. It is doubtful. It is uncertain. It depends on the decision of Swiggy. So this 30k is called UGRV. Unguaranteed residual value. Are you all following, guys? So now come back to our notes. Residual value in our example is how much, guys? 50k. Out of this 50k, what is something that I will definitely get? 20k. What is that? I may or may not get unguaranteed residual value. UGRV is 30k. Are you following, guys? They gave formula. What is UGRV? How did you get 30k, guys? 50k minus 20k. For that, book has a formula. How to get 30k? Residual value 50. Difference between 50 and GRV 20. 50 minus 20 formula potrukkom. Are you following, guys? What is GRV? How did we find 20? 20 is the one which is going to be paid by Swiggy. Correct? It's going to be paid by whom? If Swiggy says no, who will pay? So if Swiggy says no, if lessee is not paying, somebody else will pay this. Either Thiru or somebody else who's going to buy in the market. That's why look at this. Look at this. What is 20k? Amount agreed to be paid at the end of the lease, at the end of 3 years, either by lessee, either by Swiggy or third party. Third party can be Thiru or anybody else. Definitely I will get this 20k. Correct? Are you following, guys? So now you understood residual value equation. So residual value is 50k. GRV is what is paid by lessee or third party. Think in Hyundai angle. Sorry, Hyundai illa, Maruti angle. Think in Maruti angle. In Maruti's angle, I will get 50k. But in that 50k, 20 is guaranteed. That 20 will come from Swiggy, lessee or any other third person. Therefore, unguaranteed. Depends on lessee's decision. 50 minus 20, 30. Are you following? Is this clear? Now come back here. Now you tell me, what is the amount Swiggy will pay during the entire 3 years? 2 plus 2 plus 2, which is going to be 6 lakhs. Which is going to be 6 lakhs. If they want, they will additionally pay how much? 20. That means, can I say Swiggy's minimum lease payment, MLP paid by Swiggy, the MLP paid by Swiggy is 2 lakhs plus 2 lakhs plus 2 lakhs plus optionally 20k. So that means it can go up to 6 lakh 20,000. What Swiggy will pay? Now look at this. Now look at this, guys. So MLP, I'll again come back here. Minimum lease payment from standpoint of lessee. Sir, what is the term? Swiggy, if you go to Swiggy's office and sit in Swiggy's office, from their viewpoint, I'm standing in Swiggy's office. So from that standpoint, from the viewpoint of Swiggy's office, MLP from viewpoint, standpoint of lessor is aggregate of payments during lease period, which is 2 lakhs plus 2 lakhs plus 2 lakhs and GRV from lessee. What is the GRV lessee is paying? 20k. Correct? The 20k the Swiggy will pay to buy the car. The 20k is optional. I can pay, can choose not to pay. Are you following? That means MLP from standpoint of lessee, MLP from standpoint of Swiggy's option is 2 lakh plus 2 lakh plus 2 lakh plus 20k. Correct? The 2 lakh plus 2 lakh plus 2 lakh is called aggregate of payment during the lease payment, and 20k is called GRV from lessee. Are you following, guys? Now what is the amount Maruti will get? Now you have to run and go to Maruti's office. I will run and go to Maruti's office. In Maruti's office also, if I get even 1 rupee less from Swiggy, will you accept? So in Maruti's office also, what I am going to receive, minimum what I should receive in lease payments is again going to be the same 2 lakhs plus 2 lakhs plus 2 lakhs plus 20k. But Maruti is okay if this 20k can come either from Swiggy, or even if Thiru or any other third party pays also, I am okay. Correct? That means definitely I will get 6 lakh 20 either from Swiggy, or that last 20 will come from some other person. Correct? So now go and look at this MLP from standpoint of lessor. Who is the lessor here? Maruti. MLP from standpoint of lessor, if you see, it is the aggregate of payments during lease period, which is 2 lakhs plus 2 lakhs plus 2 lakhs. Sir, why am I calling it payments? Yes, in Maruti angle, it is the payment I am going to receive. So minimum lease payments in standpoint of lessor. In my angle, Maruti's angle, it's what I am going to get. It's 2 lakhs plus 2 lakhs plus 2 lakhs and GRV. What is the GRV? 20k, which will come from Swiggy. For Maruti, I will get from Swiggy, lessee, or any other third party. Third party is through. So what is the difference in both these definitions? The only difference is here GRV is only from lessee, because for Swiggy, if I pay, I will pay. But for Maruti, it is GRV from lessee or any other third party. Are you getting it, guys? You got the terms, huh? So I've taught two technical terms for you. Quickly let me revise. Residual value in our example is how much? 50k. In that, what is GRV? 20. In that, what is UGRV? 30. Understood these terms, huh? Minimum lease payments, MLP can come in two angles. From Swiggy's angle, from Maruti angle. From Swiggy angle, it will be 2 lakh plus 2 lakh plus 2 lakh plus 20 from lessee. That's why it's ML aggregate of payments during lease plus GRV from lessee. But in Maruti angle, it's 2 lakh plus 2 lakh plus 2 lakh plus 20, and the 20 can come from lessee or any other third party. So MLP, so 2 lakh plus 2 lakh plus 2 lakh from lessee, and GRV from lessee or any other third party. Are you following, guys? Understood till here, all the numbers? Yes. 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 Now the question from Thiru is, sir, from standpoint of Swiggy, why are we calling it minimum? The minimum you have to pay is 6 lakhs. 2 plus 2 plus 2. That's the minimum you have to pay from Swiggy's standpoint. From Maruti's standpoint also, why am I calling it minimum? The minimum you have to pay me is 2 plus 2 plus 2. That's why we use the term minimum lease payments. Are you following? Correct. That's what here they're saying. No, your doubt is, sir, minimum they should pay 2 lakhs plus 2 lakhs plus 2 lakhs and GRV from lessee. The GRV need not be 20k. It can also be 0. So if GRV becomes 0, if residual value is 50, if Swiggy chooses to pay 0, then the UGRV also will become 50k. Are you getting it? So minimum I will pay 2 plus 2 plus 2 6 plus GRV is my choice. Are you following? Clear? Understanding, guys? So this is the equation till here. From now I'm going to derive the formulas, guys. What is the formula, sir? Very simple. Now, totally, you tell me, totally our friend Maruti Suzuki, okay, is going to get how much money in 3 years? 2 lakhs plus 2 lakhs plus 2 lakhs plus 20k he will definitely get either from lessee or somebody else, and he also has a chance, if at all Swiggy chooses I don't want, they can also get 30k from somebody else. So now look at this. the total money I am putting into this project, in this one car of Maruti, my project is the, look at this, 2 lakh plus 2 lakh plus 2 lakh plus 20k is called what? MLP from standpoint of lessee. Are you following? Look at this, MLP from standpoint of lessee, lessor. Okay, lessor will definitely get. I'm doing it for whom, guys? I'm doing it for Maruti. So Maruti is standpoint of lessor. Are you following, guys? Now look at this. I am Maruti. I'm again repeating. As Maruti, what is the total money I'm going to get, guys? I'm going to get 2 lakh plus 2 lakh plus 2 lakh plus 20k. I will definitely get. So this 2 lakh plus 2 lakh plus 20 only I already taught you is nothing but MLP from standpoint of lessor. 2 lakh plus 2 lakh plus 2 lakh plus 20k. Correct? Are you following? And I also have a chance of getting 30k if Swiggy is not taking. So the 30k is called what in the language of AS 19? 30k is called what, guys? UGRV, unguaranteed residual value. Correct? So what is the maximum I can get? 6 lakh 50 is the maximum I can get, and this maximum 6 lakh 50 is called GIL, gross investment in lease. In the investment I made in this car, the maximum gross returns I will get is 6 lakh 50. Are you following, guys? So the first formula we have understood without knowing the formula itself is gross investment in lease. 6 lakh 50,000 is nothing but, gross investment in lease is nothing but MLP from standpoint of lessor. What is MLP from standpoint of lessor? Just now we saw here above, I explained here, correct? MLP from standpoint of lessor. What is that? Which is nothing but 2 lakh plus 2 lakh plus 2 lakh plus 20k. Because either Swiggy will pay or somebody will pay from lessor's angle, correct? Third party. And plus UGRV. What is that UGRV? Plus 30k. Are you following? Are you understanding? This is gross investment in lease. Are you following, guys? Hello, are you understanding? Now why am I paying 6 lakh 50 like a fool? If I pay, if this is 6 lakh 50 is not paid now, this is paid over. But if I pay the full money now, how much you will pay? 5 lakhs. That's how I started. Hey, I could have just paid 5 lakhs and bought the car, but that much money I don't have. So now, if I purchased it now itself, if I purchased it now by paying the full amount, you would have paid how much? 5 lakhs. That means in a place where I should have paid 5 lakhs, you all paid how much? 6 lakh 50. That means what is the excess you paid? 1 lakh 50. Correct? This 1 lakh 50 or not what you paid, can I say the excess which is earned? Correct? Because I didn't pay full 6 lakh 50. The excess earned by Maruti. So look at this. Maruti got over 3 years 6 lakh 50. But the same thing, if they got now, they would have got 5 lakhs. Now because they got over 3 years, they earned extra 1 lakh 50. Are you following? So this 1 lakh 50 is nothing but income. Are you following, guys? Income for them over 3 years. But is this income earned now as of today? No. It is not yet earned. So I will call this as unearned finance income. Are you following? I will call this as what, guys? Unearned finance income. Just now I told you what is unearned finance income. 1 lakh 50. It's income, but it's not yet earned as of day 1 when the lease is entered into. Are you following? What is 1 lakh 50,000? I told you it is 6 lakh 50. Look at this. What is this 1 lakh 50? I will write it here first. 1 lakh 50,000 unearned finance income is nothing but 6 lakh 50. It's nothing but, follow carefully, 6 lakh 50. I already proved to you 6 lakh 50 is nothing but GIL, gross investment in lease. Correct? Minus 5 lakhs I did. Correct? Now follow carefully. If I pay over 3 years, it is 6 lakh 50. If I pay now, it is 5 lakhs. That means ideally the present value of 6 lakh 50 should be 5 lakhs. See, if I pay now means you are paying 5 lakhs, sir. If you pay after 3 years, you are paying 6 lakh 50. That means you are paying the extra as an income to the other person because of time value of money. That means, can I say the present value of 6 lakh 50 of 3 years, or the present value now if I put, it should be equal to 5 lakhs. So I will, instead of 5 lakhs, I will write it as present value of GIL, present value of gross investment in lease. So in other words, I will write my income, what I am earning is nothing but 6 lakh 50 minus present value of 6 lakh 50. Or in other words, the income what I am earning is 6 lakh 50 minus present value of 2 lakh plus 2 lakh plus 2 lakh plus 20k plus 30k. Are you following, guys? Are you understanding? So now, are you getting logic? Are you getting logic? So now look at unearned finance income. Gross investment in lease, which is nothing but 6 lakh 50,000. I already explained what is 6 lakh 50. 2 plus 2 plus 2 plus 20 plus 30. That's what we did here, correct? Minus what, sir? Minus present value of GIL. So GIL minus present value of GIL is what? Unearned finance income. Nothing but logically 6 lakh 50 minus present value of 6 lakh 50. That 6 lakh 50 is nothing but, and the GIL is nothing but present value of MLP from standpoint of lessor plus PV of UGRV. This is nothing new, guys. GIL formula inga pathome. We have seen the GIL formula here, guys. What is GIL formula? 2 lakh plus 2 lakh plus 2 lakh plus 20 plus 30. Yeah? That's what I'm writing here. Look at this. Present value of MLP from standpoint of lessor, 2 lakh plus 2 lakh plus 2 lakh. Standpoint of lessor is same thing. 2 lakh plus 2 lakh plus 2 lakh and GRV. Therefore, I will add, where am I writing? Yeah, and add how much, guys? 20k. The same thing is there in both. Are you following? Plus 30k. Are you following, guys? Clear? Now, if I have to save this 1 lakh 50 for me as an expense, I should buy the whole asset now. Correct? So, if I have to buy the whole asset now, I have to pay how much? 5 lakhs. So, 6 lakh 50 is what you are paying overall. Excess you are paying is 1 lakh 50. So, 6 lakh 50 minus 1 lakh 50 if you do, 5 lakhs if you pay now, it is enough, correct? Now you tell me, in technical terms of AS 19, what is 6 lakh 50 called? GIL, gross investment in lease. 2 lakh plus 2 lakh plus 2 lakh plus 20 plus 30. In technical terms, what is this 1 lakh 50? Unearned finance income. I am yet to earn this income. So if I do GIL, gross investment in lease minus unearned finance income, you will pay what I have to pay now. That means, can I say, if I invest 5 lakh now, I will get 6 lakh 50 after 3 years. Therefore, this 5 lakh is called nil, net investment in lease. Are you following, guys? Look at the formula for net investment in lease. Net investment in lease, nothing but gross investment in lease, which is nothing but 6 lakh 50, which we derived earlier above, minus unearned finance income, which is nothing but how much, guys? 1 lakh 50,000. Are you following? So net investment 5 lakhs. So this is the value at which you have to record the asset in the beginning of the lease. So if you record the investment at 5 lakhs, it will become 6 lakh 50 after 3 years for you. Are you following, guys? That means including income. Are you following? Now you understood all the formulas. Have you understood all the formulas, guys? Should be same at IRR rate. I will come to that in some time. Okay. So now what are the formulas we learnt, guys? First we saw 6 lakh 50,000 is nothing but 2 lakh plus 2 lakh plus 2 lakh plus 20k plus 30k. This is nothing but, this 2 lakh plus 2 lakh plus 2 lakh plus 20k is nothing but MLP from standpoint of lessor. This 30k is what, guys? Again with me, UGRV. So this 6 lakh 50 is called what? GIL. Gross investment in lease is nothing but MLP from standpoint of lessor plus UGRV. Are you following? What is 1 lakh 50? 1 lakh 50 we saw is nothing but 6 lakh 50 minus 5 lakhs. Correct? So Here I am saying it's nothing but 1,50,000 is unearned finance income is GIL. 6,50,000 is nothing but GIL, which I just told, no, gross investment in lease, minus 5 lakhs is nothing but what I should have paid now. Therefore, it's nothing but present value of gross investment in lease. And lastly, I told you 5 lakhs is nothing but nil. Net investment in lease is nothing but what, guys? 6,50,000 minus 1,50,000, which is nothing but GIL minus unearned finance income. Are you following, guys? Now the question is, sir, will this present value of GIL and net investment in lease be same? In our example, both are 5 lakhs. So again, I'm repeating the important area. Will this present value of GIL, gross investment in lease, will be equal to 5 lakhs? Will be equal to the net investment in lease 5 lakhs if the discounted rate for both is discounted at IRR. Are you following? If you discount at IRR rate, it will be then these both will match. If you don't discount at IRR, then it will not match. In most of the sums, what they give us is IRR. We have other cases. I will show you when we go to the sum. Are you following, guys? Understanding? Clear? Understood logic till here? With this, we are done with the concepts that we have over here. Logics fully. So about 40 minutes is done. We still have another concept, that is sale and lease back, but that will take another 20 minutes. But if I take that now, it will be too much concept. With these formulas that we have over here, okay, we have to do all the sums. Accounting in the books of Maruti, accounting in the books of Swiggy. For Swiggy, accounting in books of Swiggy, that 20k GRV will or will not come depends on the question. Accounting in books of Maruti, what will come, what will not come. Keeping this as base, we will solve 3 to 4 sums, and then later I will go to only 2 more main concepts left. This indicators of finance lease we have to see, then depreciation and other things. Basically the core of the standard, heart of the standard is done, guys. Now I will do a few more sums in the next video and then come back to balance theory and do balance sums and close AS 19. Is that clear for all of you? Okay, that's about it. See you in the next video. Recording students, what's the next one? Thank you. So let's resume AS 19, guys. Last session, what we did in AS 19, if you all remember, we spent close to 40 minutes or 45 minutes, and we understood these formulas in AS 19. Not just mugging up these formulas, I told you logic behind these formulas using our Swiggy and Maruti example. That's it. We don't have to remember this formula in any other sum. Let's straight away go to problems. There are still some more concepts like sale and lease back, but let's do the core problems. For AS 19, what I have done, study mat itself has only 3 illustrations and 3 practical. I have taken all the unique problems. Generally, so far, if you see in AS 19, beyond this, they have not tested. Okay, this is what they have tested. There are many more difficult questions in AS 19, but this itself students struggle to understand. Beyond this, if I get, idhe padikka mattingranga, what's the point of getting extra questions? And ICA also is testing this. With the concept, you can easily solve. Straight away, let's take a classic problem. And in this problem, I will also teach you the core concept. First question, it is ICA illustration 2. That is the base. Slightly here and there I will change some amount or names. That's about it, guys. But that is the source of the question. Kattappa Limited leased mission to Bahubali on the following terms. These are not names that I am simply using or changing, guys. In actual exam, once amalgamation, they said Kattappa and Bahubali were amalgamating. ICA does it. Sometimes they do it in many, chapters or papers, just to distract you and take you away from there for those few seconds or few minutes. The minute you saw Kattappa Bahubali, immediately you are thinking about the movie. That is human psychology, but you lost 10-15 seconds if I didn't stop you. Otherwise, you would have gone and think, on the song Anushka came like that only, no. Oh, then you again will come back, oh, you have 5 minutes over. Abdin Soli. Come back. So, Kattappa leased. Who is the lessor? Kattappa lease. So, Kattappa is the lessor. That's it. I'm going to talk only lessor. I need to know who is the lessor, who is the lessee. So Bahubali here is going to be the lessee. Some mission on the following terms. Okay, what are the terms given? Fair value of the mission is 28.3 lakhs. I just have the question here just to cross check ICA study mat so that typos are not there. Okay. Lease term 5 years. Lease rental per year 8 lakhs. GRV, we already discussed the other day. In our example, what was GRV? 20,000. Excellent, was GRV. Overall RV was 50,000. Those who are watching recording can correct from previous video. And then UGRV was 30,000. Okay. Expected residual value was 3 lakhs. GRV is 1.6 lakhs. Therefore, UGRV he has not given, but UGRV will be 1.4 lakhs. I taught you the names also, why it's called GRV, why it's called UGRV, and why do we total it. Then internal rate of return also we discussed in the end. If you take it this rate, that means you're taking it the correct rate for the problem, which is 15%. When they give percentage, I told you what we have to do. Now question is simple. What is asking you? Calculate unearned finance income. There are two ways to do this. One is to write the formula. What is unearned finance income? I mugged up, sir. UFI is GIL, gross investment in lease, minus present value of gross investment in lease, and mug up that formula. Something will forget. No. In our example, what we saw was unearned finance income. Something I could have bought for 5 lakhs today, I am paying over the period of time, and I paid 6 lakh 50. So in our example earlier, unearned finance income was 1 lakh 50. Swiggy example, where I told you 6 lakh 50,000 is what I have overall paid. The present value of this 6 lakh 50,000 is going to be my 5 lakhs, correct? But I will not take as 5 lakhs. I told you present value of 6 lakh 50 will be equal to 5 lakhs. It will be equal to 5 lakhs only if you discount at IRR. And in this question, they're discounting at IRR itself. Okay, fine. Are you following, guys? See, I will talk more about IRR in a different sum. For now, this basic understanding is enough. It's much more detailed. I am not getting into all of those FM metrics. Now, I told you this 1 lakh 50 is what we have to find. So, in this question, let me write UFI is equal to 0. And what is this GIL? In both cases, GIL. How did this 6 lakh 50 come? It was 2 lakh plus 2 lakh plus 2 lakh plus 30,000. No, plus 20,000 plus 30,000. Basically, minimum lease payments paid by the lessor plus UGRV. That's what we did. Correct, guys? Are you following? Now let me replicate. Instead of writing that in exam, don't write Swiggy values, guys. That's for you to connect with the formula. So over here, I don't want formula. What is the total payment? In this question, you have to see in the angle of Katapa, in the angle of lessor. Because for in this standard lessor or lessee, we don't use minimum lease receivable, minimum lease payable. For both, whether the party is receiving or paying, we use the term MLP. For that only I told the logic is standpoint, in whose standpoint we are seeing. So we are doing this sum in whose standpoint, in whose angle? Income is for whom? Lessor. So for lessor, he is definitely going to get 2 lakhs plus 2 lakhs plus 2 lakhs plus 20 he will definitely get. And beyond that, he may get UGRV. But we don't know now. We know only in the future. So here, over there it was 2 lakhs plus 2 lakhs plus 2 lakhs. Here it will be what, guys? 8 lakhs plus 8 lakhs plus 8 lakhs plus 8 lakhs plus 8 lakhs 5 times. Correct? So let me write that. So that's going to be 8 lakhs plus 8 lakhs plus 8 lakhs. How many times, guys? 5 times. Plus GRV. GRV is given as what, guys? They are given 1.6. So 1.60 lakhs. This I will definitely get. That's why it's called MLP from standpoint of lessor. So in exam when you write, I will write for this breakup MLP from standpoint, in the angle of standpoint of lessor plus. Correct? Plus what? He got extra 30. What is the 30 called? UGRV. In this question, just now we found UGRV is how much, guys? 1.4. Here I will write how much, guys? Plus 1,40,000. But please show the breakup somewhere, guys. 3 lakhs minus 1.6. Not in the question. Answer, you should show the breakup somewhere. So now if I add all of this, when you write neatly, expand the formula. MLP from standpoint of lessor plus UGRV. So you will get how much, guys? Now total here. Unearned finance income is going to be 8 lakhs into 5 is 40 plus 1.6 plus 1.4 is going to give me 43 lakhs. Are you all with me, guys? This minus present value of 43 lakhs will give me the final answer. Now to find this present value only, I have to do the present value dabba, which is fairly simple. Basically what I have to do is year 1, year 2, year 3, year 4 and year 5. Can I take annuity factor? Yes, because the amount is same every year. So first year I will write how much, guys? 8 lakhs, but better to show the breakup because how else will you get the full marks? Annuity should give you the full marks, guys. Okay. Mm. We have to write. We have to write. We have to write. Yeah, yeah, we have to write whether it's a finance or operating lease for sure. Okay. Let me finish that question. 8 lakhs for 5 years. Then we also need what, guys? Discounted factor. Now, with this itself I can stop? No. See, basically I need to discount this whole 43 lakhs. So this whole 43 lakhs also includes in year 5 GRV how much, guys? 1 lakh 60,000, and it also includes in the same year 5. Sometimes people make mistake here and they write year 6 out of flow. Again how much? 1 lakh 40. Sir, can I club both, sir? 1 lakh 60 and 1 lakh 40. I will club and write 3 lakhs to save time. No. Are you following, guys? No. There is a difference. You have to show the difference. In particulars column, see, I am only writing amount. You will have one more column called particulars. Here you will write, what is it, guys? For this you will write cash flow or MLPs. Here you will not cash flow, basically MLP. Then this will be GRV, this will be UGRV. Quickly, he has given the percentage for all the 5 years. Don't take the struggle of taking the calci, guys. Just tell me what is given there. 8696. So discounted cash flow, sorry, discounting factor 0.8696. Discounting factor at what percentage? 50, no? 15%. Second year is 7561, 6575, 57, 18, then 49. Another common mistake here, because they gave here in this question, you will stop. But if they don't give again next year also, because you are in that flow of exam, instead of writing 0.4972 again, you will write for 6th year. You will put one more equal to and write. When you will realize, after you get the certified copies, you will realize that. Okay. Are you following, guys? Sorry? Multiply everything. 7 2. Oh, sorry. So you will do the multiplication, guys. Multiplication I'm not going to do. So you will multiply everything. Quickly do it, guys. What is the final answer you are getting after doing for all the years? 28 lakh 30,000 920. Round off whatever, guys. 28 lakh. Let me check the answer in the book itself. Okay. Yeah. So here it is. What I have done, sir, you are not solving the sum, we are solving majority of the sum. We are writing the amount along with breakup. I told you, look at this, they are writing what is MLP, GRV, UGRV. Then this fully copy paste is done. Only this multiplication column I am asking you guys to do it. You do it. And here student told answer is 28 lakh 30,000 920. Sir, why can't you do, sir? You are lazy. Just to save some time, guys. We are in workout, not regular. Regular, na, I have to solve. Otherwise, the student will sit on my head. Okay, fine. Following. So this is what you will write the answer over here. That's the answer you're getting here. Clear, guys? That means now this 28 30 920 I will go up and I will substitute over here. I will substitute here. How much you're getting, guys? Minus 28 30 920. Give reference below, working note 1, whatever. And now you will get the final answer. Unearned finance income. How much, guys? 14,69,000 080. Are you all following, guys? With this, the sum for exam is over. But we are going to do a lot more of understanding here. We are going to do a lot more understanding, guys. Is this clear? All of you understood? Now, this same question. Now, let me first finish this question. They asked what in the exam? What is unearned finance income? if the same question comes where they're asking you, hey, can you compute, this is receivable. That means what I will do, guys, look at this, what I will do, this 28 lakh 3920, no, the katappa, the lessor will pass this entry. What entry will lessor pass when he is selling? He will pass 2 lessee is buying, correct? He will pass lessee account debit, which is nothing but in this case Bahubali account debit, to sales. I am selling, no, I am selling, guys, to sales. What is the amount, guys? 28 lakh 30,920. Are you following, guys? This who will pass, guys, this entry? Lessor will pass this entry. Are you all following, guys? Now this is where the magic of the sum is going to happen. Follow. With this sum, so if they ask you journal entry, I will pass this journal entry and finish it. Are you all following, guys? Understanding for this sum? That's it. Now next, இதே same question. Are you all understanding? Hello? Now same question. If they ask you, I'm only making one small change. Only one small change. Okay, nothing on above changed. They're asking, instead of unearned finance income, I'm asking you same numbers, compute lease liability in books of Bahubali or in the books of lessee. In the books of lessee. Okay, are you following, guys? Then sum is going to be the same. I don't have to find unearned finance income. I have to do the discounting. I have to do the discounting because I'm paying 43 lakhs, close to 43 lakhs. But when I am doing discounting, one thing is not needed. What is it? This UGRV is not needed because as a lessee, I will never pay UGRV. GRV itself is optional for me. If I want, I will pay. Correct? If I want to buy the asset. So for lessee, the same sum will be done. Table mattum. And without UGRV, if you do, how much you're getting in that case? Anybody has the breakup? The last item, that UGRV alone you have to reduce. How to do it, sir? Very simple. My answer is 28 lakh 30,920. Minus, I'll show you minus. How to do it? Last is how much? 1 lakh 40,000 into 0.4972. Are you following? From this total, guys, I have to eliminate only the present value of UGRV. If at all I had all the values over here, let me show it over here. See, all I have to do is lease liability here means this 28 lakh 30,920 minus this 69,608, which is nothing but this 69,608. Then how much you're getting, guys? 27 lakh 61,312. Are you following, guys? This will be the lease liability that lessee will keep in books. This will be the receivable that lessor will keep. Sir, why the difference? UGRV concept, Swiggy. Are you following, guys? Understanding? All of you clear? Now in this, when it comes, is this clear for all of you, guys? So left hand side is going to be the value for lessee, right hand side for lessor. Can I just erase all of this part, guys? Okay. Now go to the question. See, in one question I'm going to teach you all the concepts. Unknown finance income, enough. But same question, change for lessee, you know the change. UGRV don't take. Are you getting it, guys? Second one, next one, fair value of the asset is 28 lakh 30,000. No? Correct? So I will come here and write how much? 28 lakh 30,000 is the fair value of the asset. Okay. Now when I am recording liability in my books, I have to record the liability at the lower. I'm talking about lessee. I forget about lessor. I'm talking about lessee. I'm talking about whom, guys? Lessee. I'm talking about lessee. For lessee, what entry will lessee pass? Just now I showed you entry for lessor. For lessee, it's a liability. So he will pass to lease liability account, asset account. I'm getting the asset. Okay. Asset account debit. I took the asset on lease. What amount to write here? This amount is the table value, correct? Or in other words, this amount is the present value of GIL, present value of gross investment in lease. This is given in question, fair value. Don't bother about this. This you don't, third one you don't bother, guys. This is not required for us now. Wait. Where is, yeah, this is not required for me. I'm just striking off in blue, so it's still visible. This is not required for me now. I'm only looking at lease liability versus fair value. Which value will come in the entry? Are you following, guys? Can you tell me logically which one will come? If I purchase now, I have to pay 28 lakh 30. But because of this transaction, I am paying much lower. I'm paying much lower. How much? 27 lakh 61,312. I will tell you shortcut also, but I want to tell you logic. See, if I buy now means I have to pay 28 lakh 30. But because of lease, I'm actually saving money. You are saving if it's 15% IRR. Okay. If the inflation is not more than 15%, if your returns is not more than 15%, this chapter I can take for 6 hours. Okay. I'm just going little bit exam oriented. So here, instead of paying 2830, I am saving. My liability is only 2761. So I will record it 27 lakh 61,312. Are you following, guys? 2761,312. Are you with me? But instead of 27 lakh 61,312, if at all after discounting, I get 29 lakhs, for example. I get how much? 29 lakhs. Then you are paying more than what you should be paying. I'm repeating, you are paying more than what you should be paying. Ideally, you should have paid today only 28 lakh 30. You are paying 29 lakhs. So that means you are paying extra 70k. That extra 70k is an interest component. It's an interest component. That means if this is 29 lakhs, you have to then not record at this amount. You have to record at this 28 lakh 30,000. Are you following, guys? Are you getting the logic? Are you getting logic? So, sir, I'm still not understanding, sir. Exam only I want to pass, sir. Simple. Lease liability, you have to record whichever is lower. That's it. Whichever is. You can mug up whichever is lower, but I want to give you the concept. So look at this. What they are saying here. When asset is recorded in the books of lessee, in our example, lessee is Bahubali. In Bahubali books, inception of lease, however, recorded other than you recorded what other than fair value when present value of MLP is less than the fair value. So basically, whichever is lesser, guys. Are you following, guys? Clear? Exam, whichever. That means in exam, be very careful. Simply don't take the value that you compute for lessee. For lessee, I'm saying, always remember to cross check with what is in fair value. Don't worry. This sum we will take 30 minutes also, it's fine. In this one sum, I will teach you all concepts. Then remaining sums, like this, we can just finish it off. Are you following, guys? Have you understood till now? So till now, what all we have learnt, guys, are they same data which we can do so many questions. Okay. We have learnt in the books of lessor. In books of lessor, you will take everything including UGRV. In the books of lessee, you will not take UGRV. But in the books of lessee, when you are doing lease liability, I will compare my present value of GIL with fair value, whichever is lower. That's it. Examiner, they won't ask you why. Okay, leave it. Maybe interviewer, if they ask also, you can manage. Okay. Are you following, guys? Okay. Next. Same question. I will do for one. I will either do for liability or what to say, lessee or lessor. We can do it for one. Whom do you want to do it for? Okay, lessor. Usually I've done lessee in the previous classes. Let me do for lessor. So I'll come back to the one I shaded in blue. 28 lakh 30,000. 920 is an income for me. So what entry we passed over there, guys? We passed. I'm doing it in the books of Kattappa, which is lessor. So my entry is lessee account debit to sales. I'm yet to get the money. What is the amount? 28 lakh 30,000. 28 lakh 30,000 920, 28 lakh 30,920. Usually I've done in the previous classes for liability, guys, so don't get confused. First time I'm doing for receivable. So what I will do, this is 5 years. So let me write year 1, year 2, year 3, year 4, year 5. This table they are not asking in exam, but it's there in ICA illustrations for you to understand core logic, so that any sum you can do. Okay, if at all something comes. Okay, quickly. Now I will write down opening receivable. Opening receivable. I recognize at what price? 28 lakh 30,920. Keep your calcs with you recording in here. You are going to help me with values. I am going to prepare the full table, not like doing 1 year until you do the rest. Okay. Then on this interest income I will get a. Now look at the magic that's going to unfold, guys. I'm going to get interest income. Okay. Along with that, he's also paying the EMI, but I will not call it EMI. I will call it MLP. Okay, I'm going to get MLP. Correct? MLP will be paid. So let me fill the values. What is the interest income for the first year? 15%. Correct? So I will always get interest on what is receivable to me. So what is receivable to me? 28 lakh 30,920 into 15%. How much you're getting? Quickly, calculate in your hand, guys. 4 lakh 24,000. 638 is the amount of interest I have earned this year. Look at this, is the most important part of our standard, guys. Remaining all sums are dabba sums, time pass sums. Okay, this is the most important part. MLP. What is the MLP amount? This is given for all the years. It's going to be 8 lakhs. Now follow very carefully. When I am getting the first installment, lessor. When lessor is getting the first installment in year 1, journals, I'm telling you guys, there is no sum for journals. Bank account debit will be 8 lakhs. Now I am going to receive this EMI. Think of EMI. EMI is a component for interest and principal. Correct? Now I'm on the receivable side. So I am getting income plus my receivable is going to reduce. So what is my income here? You only computed 4 lakh 24, 638. So I will write 2 interest income. Receivable kadiyadu. Okay, receivable, whatever, interest, 4 lakh. Guys, follow. 4 lakh 24, 638. Are you all with me, guys? Therefore, the balance money, the balance will reduce the lessee account. Correct? His receivable is how much? 28 lakh 30, 920. So I will credit to lessee account. Basically, debtors is reducing because he paid me the money. But how much he paid me? Out of 8 lakhs, 424, 638 is my interest. Therefore, the balance will be 3,75,000. 362 is going to be the principal reduction component. So I will write here. I will come back here. Principal. See, principal is a term that I use for liability. Lessee books la I will do principal. Here I should not be using principal. Let's say receivable reduction. Okay, receivable component. How much is that? You just know from 3,75,000. 3,75,000, 362. That means, look at this. What was the opening balance of the receivable, guys? Opening balance was 28 lakh 30,000. From this he paid 3,75,000, 362. Therefore I will write closing receivable. How much is that? You have to do 28 lakh 30,920 minus 3,75,000, 362. How much? 24 lakh 55,558. I want you all to cross check, because if one student makes the mistake in first year, full dabba gone. I have to redo the whole sum. Okay, so keep cross checking. So second year opening balance will again be 24 lakh 55,558. Are you following, guys? So my interpretation of this is, hey, the other person, Bahubali, has to pay me 28 lakh 30,920. This year he paid me how much? 8 lakhs. In this 8 lakhs, 4 lakh 24, 638 is my income. Balance 375, 362 is my repayment of principal, repayment of loan I give, repayment of my receivable prime. So my closing receivable is 24 lakh 55, 558. This is second year opening. Are you following? Now second year again what will happen? Second year again he has to pay me interest at 15%. What is the amount for that over here now? 28 lakh 55 558 into 15% again. How much? 3 lakh 68,000. Now this time my interest for year 2 is reduced. Why sir? From first year 4 lakh, first year 424 it reduced because my closing balance is reduced. My opening, my last year closing. So my opening, my receivable keeps on reducing. Interest is being charged on receivables only. So every year he is repaying. No, that fellow repaid 8 lakhs. No, so he has to pay less interest next year. Correct? Are you following, guys? I'll tell you why this sum is very important. Follow carefully. So again, second year also 8 lakhs. Therefore, what is the balance receivable, guys? Now, do you want to pass journal entry and do missing figure? No need. Okay. So here it's going to be 4,31,066. Sir, how did you find for recording students for somebody if they're still not able to get? Out of 8 lakhs, 3 lakhs 68,333 is interest. So this is the balancing figure. Are you following? Now what is the closing receivable? 24 lakh 55 558. In that 4 lakh 31 667 is received. Therefore balance is 20 lakh 891. Excellent. I'm getting the answers before I ask itself. That means recording. By now you should have gone to year 4 or year 5. Sir, waiting for me, sir. When you ask, I will do all those. No, guys, come on. Let's start off. So 20 lakhs, 23, 891. Now quickly. You understood the drill? What I did for first and second year. Now quickly, guys. Just tell me the values. I will fill. Recording. You have to do it before I finish, guys. Otherwise, okay. So this is going to be interest. MLP will again be 8 lakhs. Interest will be paid on this 20 lakh 23 891 15%. Correct? How much you're getting again in that case? 3 lakh 3,584. Correct? Solunga guys. If you tell wrong in one place also gone. Okay va? So recording will tell yaar sir ninga vela tappa pandringa. Receivable will be now again how much? Out of 8 lakhs I got 3 lakh 3,584 is my interest. So receivable will be 4 lakh 96,000. 416. So what is my closing receivable now? Closing receivable is 20 lakh 23 891, out of which 4 lakh 96 416 is paid. So closing is how much, guys? 15 lakh 27,000 475. Yeah? Okay, same thing. I'll bring it again here. 15 lakh 27,000 475. Again interest, guys. Interest for year 4. Come on. 2 lakh 29,000 121. MLP is going to be 8 lakhs again. Now again look at this. Out of 8 lakhs, only 2 lakh 29,121 is the interest income. Therefore balance receivable will be 5 lakhs 70. 70, yeah? Okay. 5 lakhs 7,879. Therefore what's the balance principal, guys? 9 lakh 596. I'll bring it to the last year, guys. Be careful. 9 lakh 56 596 is my last year. I will repeat again in the last year opening receivable. My interest into 15%. How much are you getting? 1 lakh 43 489. My MLP is again going to be 8 lakhs in this year. So my closing principal receivable is how much component, guys? Out of 8 lakhs, 1 lakh 43 only is my interest. Therefore, 6 lakh 56,510. Now what is the closing balance that you are getting? How much you are getting, guys? I'll explain. 3 lakh? 3 lakh? Excellent. You are correct. I'll write again. 3 lakh. Correct. This is. Leave the points. 100 rupees difference. You leave it. Okay. Did you all understand till here, guys? Okay. Now, what? Okay. So that means you understood these terms till here. Now let me tell you. Let us do a little bit of understanding. What is the total of this interest income? All the 5 years. Add it. 424 638 plus 368 333 plus 303 plus 229 plus 143. Add everything, guys. Add everything. 14 lakh 69,000. 1 165. Yeah? Okay. Is this number looking familiar to you? 14 lakh 69,165. Your unearned finance income above was 14 lakh 69,000. 80 rupees difference. That 80 only we have here. Rounding off. That is rounding off. Leave it, guys. Understood? So that means the unearned finance income that you computed above was for gross level. This is on a yearly basis. Now suddenly in exam, if they ask you what is the unearned finance income for third year, you have to prepare this dabba till third year. Okay, new question. Suddenly in exam, if they ask you what is unearned finance income for the fifth year, so sorry guys, you have to prepare for all 5 years this table. That in the above formula, we are getting on a gross level. Here we are finding it individually. This is first level. Okay, now follow, guys. Sir, what is this closing balance of 3 lakhs? How much that fellow paid me so far? He paid me only 8 lakhs into 5. After this, in our above table, I still have to receive GRV and UGRV. 1 lakh 60 plus 1 lakh 40 is how much? That only is the 3 lakhs. 85 was the difference rounding off. So my closing balance is nothing but my residual value, which I am still yet to get because only lease payments are done. After the lease gets over, this full 3 lakhs I may get if the lessee is not taking the asset. Then I will sell outside. But if lessee is taking the asset, I will not get full 3 lakhs. I will get only part of that. How much? 1 lakh 60. But sir, I am not recording income. I am recording income of only what? This interest income only is my income column. Are you following, guys? Understood? Now the same dabba if I do for lessee. I am not doing it now. Same dabba if I do for lessee, I have to start the sum. Here I started with what value, guys? 28,30,920. That's what we recorded here. 28,30,920. For lessee, I told you whichever is lower. So in this sum, which was lower, 27,61,312. In that, if you start here, here it was interest receivable. Here it was interest income. There it will be interest payable. Here it was receivable reduction. There it will be principal reduction. And there the closing balance, I don't even have to solve it. The closing balance will be only GRV. Correct? It will be only GRV because over there we are not taking UGRV. Adana we striked off. Correct? So for lessee table, the closing balance will be only GRV. For lessor, the closing balance should be GRV plus UGRV up to 100 rupees. Rounding off difference is fine. 85 rupees we got. Sir, I got 110, sir, in exam. Don't panic. 10 rupees, leave it. Okay. Are you following, guys? Understood? No, this you don't have to do in this sum. When I should do, they will ask you, pass the journey. Now this dabba we finished. Now I'm going to ask you one simple question. Question is, what is the interest for the third year interest income and what is the entry to be passed in second year? What entry he will pass, guys, now in second year? Same entry, Same entry, guys. Bank account debit will be how much? 8 lakhs. Interest income will be 3 lakhs 68. 333. Now what is the balance will be how much? Don't have to compute. 4 lakh 31. 667. 4 lakh 31. 667. Are you all with me, guys? Following, enjoying, guys? Some more interpretation. I'm not done, guys. I'm finishing all sums in this table. Then we'll practice sums. Okay. Next one. If you look at the trend on a yearly basis, interest is showing a declining trend. Receivables is showing an increasing trend. That means this is year 2 order entry. What I passed here. In year 2's entry, interest is almost 3 lakhs. Principal is almost 4.3 lakhs. Correct? But if I go to the last year, interest is only how much? 1 lakh 43. But the principal is 6 lakh. Every year when the principal is being repaid, the interest will keep dropping. For you to check if accuracy of table. Are you following? Now let me ask a question. Okay. The party, now same question. If MLP is not 8 lakhs, because it is 8 lakhs every year, it's easy. Okay. If he tells MLP is first year 8 lakhs, second year, and we don't have some, but I saw the sum. I didn't want to say it brings so much difficulty. If they say MLP first year is 8 lakhs, MLP second year is 12 lakhs, MLP third year is. These are called balloon lease payments or funnel lease payments. Where initial years I will pay 20 lakhs MLP. It will reduce. First year 20, second year 15, third year 10, fourth year 5, last year 2 lakhs. We don't have a sum like that. If it comes, don't panic. You prepare. And then they will ask you, find the unearned finance income and kepa. Okay. For third year, he will ask you. Same dabba, instead of writing 88888, you will write whatever is given. Every value will change. Are you understanding? Are you getting it? You don't have to panic. Your MLP is changing. Doesn't matter. This one dabba will solve any sum for you in AS19. All of you understood logic. Clear, guys? I did this for lessor. Same thing for lessee. Only change. UGRV will not come. Name also will change. Correct. Lessor will become lessee. But conceptual sonna. Correct. Receivable badla principal agu, interest income badla interest expense it will become. Yes, if MLP changes, of course in the first dabba also you will change the MLP. You can still find gross level, you can find of unearned finance income easily. Doesn't matter. Even if MLP is changing 8, 10, 12, I can find at gross level. But what if they ask you, I want third year's values. I want to know how much is the principal component in third year. What is it? Which one you will circle? This one. Correct? That's all. Yes, Harish. Correct. Now here, this is for lessor. This 3 lakhs closing is principal receivable amount. In that I will actually receive only GRV. But depends on other person. Ide lessee box means that closing will be payable. GRV payable. Now if you want to make it 0, very simple. Now if I want to make it 0, same year 5, I will ask, Kattappa will ask Bahubali, do you want to buy this, what, car or asset? He will tell yes. He will pay 1 lakh 60. No need to compute interest again. It's the same year, year 5, correct? So this 3 lakhs will reduce by 1 lakh 60. Closing becomes what? 1 lakh 40. You will not get this. It's a loss for you. Are you getting it? Because he took it, it's a loss for you. Are you following us? You will go and debit that in P&L account. Understood? That receivable you will not get. When you will get, if the lessee is not taking this asset, then I will sell this to some other third party and hopefully recover 3 lakhs. Hello, this 3 lakhs is the residual value. It's an estimate by itself. So if you don't get that, don't be like, sir, how can you account revenue? It's an estimate. AS5. Correct? Residual value or estimate. Following? Clear? Like this sums have not come. This 3 lakhs sums have not come. Maximum they will ask you what is second year interest, fourth year interest. Are you following, guys? Now you can pass journal entry also. Journal entry also will be able to pass. This is for receivable. Opposite is for payable. Bank will come on credit side. These two will go on debit side. Are you following, guys? With this we are done with the, not the first sum, almost whole of chapter. All these type of sum. Lessor book accounting, lessee book accounting. Can we proceed, guys? Okay. Let me go to similar question now. Question number 3. ICA test your knowledge. This standard mostly I am taking questions from ICA study mat only. I could have given the whole recording itself, but I wanted to record everything as much as possible. Okay. Fine. Clear? Okay. Question number 3. 3 dana? Oh, not 3, sorry. Let us do question number 4. 4, sorry. 4 is test your knowledge 13. Yeah. Question 4 we will do. Okay. Now what is going to happen is, using the same formula, there is going to be missing figures. Okay. Doubt anybody? Video went off. No. Okay. Look at this. BNP Limited availed a lease from NNL Limited. Okay. Conditions of the lease is as follows. Lease is for how many years? 3 years. Okay. In the beginning of the year 2009, equipment costing 10 lakhs has an expected useful life of 5 years. Yeah, has 5 years. The fair market value is 10 lakhs. So look what he is saying. Lease period is 3 years. Okay. But asset has a useful life of 5 years. So here I want to introduce you to terms. Look at this, because we discussed that over there. We have useful life and economic life are two terms. Okay. Yeah. Okay, I'll come back to this. Let's not confuse now. There are one more two terms. Sorry about it. Let's read this question itself. Sorry. Yeah. So lease period is 3 years. I'm going to use the asset for 3 years, and useful life is motama 5 years. That means I am not using the asset over its entire life. Out of 5 years life, I am using only for 3 years. Fair market value is 10 lakhs. That means if you buy the asset now, you have to pay 10 lakhs. But I am not buying it now. The lease reverts back to the lessor on termination of the lease. This is like in the Swiggy example. After 3 years, the car will go back to Maruti. Car will go back to Maruti. Are you following? In this question, we are going to learn two concepts. One is reverse working, which I will do. Then there are some indicators that I will teach after the sum is over. Then they are saying the UGRV is estimated to be 1 lakh. Okay. 3 annual payments are made at the end of each year. Important to highlight over here. 3 equal annual payments are made at the end of each year. That means like previous sum 8 lakhs, 8 lakhs, 8 lakhs equal. Okay. IRR is given at 10%, guys. Present, what is IRR? 1 rupee at the 10% end is 0.7513 and annuity is 2.4868. Are you all with me, guys? Then is asking, state whether it's a finance lease or operating lease and also calculate unearned finance income. I am yet to teach you how to classify a lease as finance or operating. So leave that part. That's just theory part. That's 2 minutes. Just now we did a sum. Illustration 1 was nothing but calculating unearned finance income. So this sum also I want you to calculate unearned finance income. Very easy. One small reverse working is there. That's all. Take 2 minutes and try it out, guys. 2 minutes and try it out. Very easy. Recording also. Recording I will just pause and resume immediately after the time is over, just to save that time. Okay. Let me resume, guys. You had the time to solve. Those who got it, fine. Otherwise, nothing to worry. What are they asking us? Unearned finance income. Correct. Let me go quickly over there. Now I don't want to go into much concepts. You know the concept of unearned finance income. Let me straight away go for equation. What is UFI? GIL minus present value of GIL. GIL we can straight away compute from the question. Can we compute, guys? What is gross investment in lease? MLP. How many years is the lease? 3 years plus GRV. Correct? Minus present value of same MLP into 3 plus GRV. UGRV comes, yes, of course. So I have to add here also UGRV. I have to add here also UGRV. Now, usually right hand side all the values will be there. I have to fill values whatever is given over here. So you get UFI. This time there are many missing values in this question if you see. This also is not given. So I'll write unearned finance income here. Let me try to simplify this. Let me call MLP as X just for our convenience, because they have not given the MLP in this question. They just told it is equal. It is equally paid for 3 years. So I will write X into 3, which is nothing but 3X plus. Have they given GRV in the question? GRV also is not given, but yeah, look at this. They have given a hint. They have given a hint saying the property, look at this. The property reverts back to the lessor on the termination of the lease. That means at the end of the lease, only if you pay GRV, asset will be transferred. Here, GRV is not paid. That means GRV itself is not there. Are you getting it, guys? Are you understanding? See, in the Swiggy example, 20k if I pay, I will get the car. If property is going back, that means I am not even giving you the option to buy the asset. That means GRV is 0. Here UGRV only is RV. GRV is nothing but 0 because of this one line. Well, reading the question also I read it, but don't worry. This is one such type of question which needs the explanation. So GRV, this is study mat question, guys. Study mat question. Okay. Plus GRV will be 0. Plus I have to write UGRV is given. Correct? How much? 1 lakh. So I was able to fill out two values. Same thing will come here. Are you following, guys? Now this present value part, only, present value part, I am writing above in equation. Present value we can write in equation or we can write in table. Correct? Correct? So here what I will write, I don't know cash flow. X x, correct? Are you following, guys? That only is 3x, correct? I'm taking MLP as x. We don't have GRV. So that means GRV irunda 0 eldirpan. So let me not write 0 and waste time. You understood GRV is 0. So UGRV is how much? 1 lakh. When I'm doing in the books of lesser angle, I will take GRV and UGRV. Remember this. Discounted factor is given. They have given discounting factor, correct? What is it? For third year, they gave discounting factor how much? 0.7513. And what about the first 3 years? They have not given separately, but they have given us what? Annuity factor 2.4868. So instead of writing one by one separately, I am writing together 2.4868. Are you getting it, guys? Are you all with me? Hello? Okay. Now, follow carefully. In this question, what he has also told, all the concepts are being applied here. Look at this. He has also told IRR. Consider IRR. What I told you, IRR is the rate at which present value of all cash flows will be equal to what? Fair value. Remember I told in the first class previous. So IRR is the rate at which present value of all the cash flows will be equal to fair value. So my fair value is given as how much? 10 lakhs. So I will write my present fair value will be 10 lakhs because I am discounting at 10%. Are you getting it? This is the next thing. So first hint is write the equation. In that second hint is GRV is 0. Next hint is what? Here, because it's IRR, present value of GIL will be equal to 10 lakhs at IRR rate. Correct? Yes. Okay, leave 2.4868. Tell me the discounting factor of 10% for all 3 years at 10%. Correct? 0.9091 9090 second 82.7513. Correct? This is what you will normally write. Harish had a doubt, sir, how this total came. Can you total these three? 2 point? Same thing. That's what we wrote earlier also. Correct. They have given the total. Understood? So discounting factor thaniya edukradhukku badala if I take 2.4868, that's called annuity factor. That means instead of me multiplying x into 0.9, x into 0.8, x into 0.7, I can just multiply common. I can multiply x into this. Are you following, guys? So now let me solve for equation. Here it will be 1 lakh into 0.7513. How much, guys? 75,000? 130. That means this will be balancing figure. Which balancing figure? 10 lakhs minus 75 130. Correct? So how much is that? 9,24,870. All of you with me, guys? So now I can solve. X into 2.4868 is going to be 9,24,870. So let me solve for x. So again I'm getting 3x into x into 2.4868 is equal to how much we got above, guys? 9,24,870. 9,24,870. So therefore here x is equal to 9,24,870 divided by 2.4868. How much you are getting x? 3,70,000? 912. Let me check if that's the... Okay, it's not there here. Okay, no problem. This is the MLP. Are you following, guys? Let me finish the sum. I'll again run through the whole problem once. So now if I come back to the main equation where the sum started, we didn't know what was MLP. Now we found MLP. Now you can finish the sum. What is 3,71,912? So I will come here again. So MLP is going to be 3,71,912 into 3 plus 0 is my GRV plus UGRV is 1 lakh. If I do everything, how much are getting? 12,15,000. Perfect. 12,15,736. Sir, what is present value of GIL? Just now I told you, no. present value of Jill is 10 lakhs at IRR. So no need to do any equation. You can do it again. Again, what you have to do, this table you have to discount. Instead of X, you will write the value. You found the value. You will get how much, guys? Minus 10 lakhs if I reduce. What happened? Okay, so minus 10 lakhs if I do, you will get 2 lakh 15,736. Correct? 2 lakh 15,736. Are you all with me, guys? This only is the answer. 2 lakh 15,736 is the unearned finance income. Worthy 5 marks summa. Okay. It's a page break. Apple product. Okay, now let me just brief the whole sum once for you guys so that you will get the whole connector. In this sum, if you see, they asked us, I'm just revising the whole sum. So basically nothing new, it's missing figures filling. Okay, they asked us to compute unearned finance income. I'm revising in 1 minute. You know UFI, guys, is gross investment in lease minus present value of GIL. This you all know. In this equation, if you see, MLP is not given. So we did MLP into 3 for 3 years plus GRV plus UGRV minus the same thing minus present value of MLP into 3 and all of the same thing. GRV, all of that. Correct? Now, the problem in this first thing we computed was GRV becomes 0 because asset is going back to the lessor. So I can eliminate GRV from my equation. Now when I write left hand side, I don't have MLP, I have only UGRV. So MLP into 3 plus UGRV, we can't do anything much. Coming to right hand side, I just rewrote the right hand side in a table format so that you will understand. In table format, what I wrote, MLP for each year multiplied by discounting factor for each year. But instead of doing for each of the years separately, because they gave annuity factor, can I do separately? Yes. They gave annuity X into 2.4868 I wrote. And then I wrote UGRV is 1 lakh into 0.7513. Still we didn't get the data. 75,130 we got for UGRV. But we still didn't have this value because here also it is X. One side we need to have value. That's where I introduced the second concept. First concept is GRV is 0 here. Second concept here is what? At IRR, present value of GIL is going to be equal to what, guys? Fair value. So fair value I wrote 10 lakhs over here. So if the present value is going to be 10 lakhs and the UGRV value is 75,130, this 924,870 is going to be the balancing figure. In this 924,870 balancing figure, you have X into 2.4868 is this. Now you can just basically solve for X, which I did in separate page. You found 371,912. So if I come back to this equation, all I wanted is what? MLP, because before that before that UGRV I have, GRV is 0, MLP irunda I can find UFI. So MLP is available. I substituted, found 2,15,736 as unearned finance income. Are you following, guys? All of you understanding? Vishnu Priya? Sure. Okay. Same sum is there in your ICA illustration. Test your knowledge 13. Okay. Clear, guys? So if at all they want to test, they can test it. Now, sum is not yet over, but I want to take one theory before I go to next stage. Sir, how do I classify something as finance lease or operating lease? Very important. How to classify something as finance or operating lease? Quickly look at this, guys. There are 5 conditions, and in these 5 conditions, if you meet at least one, you will be called as what, guys? Finance lease. No need all 5, any one. I can spend a lot of time here, but quickly, keeping exam in mind, the present value of lease payments is substantially equal to the fair value of the asset. Now in this question, what is the present value of lease payments? Present value of all the lease payments, how much you're getting? 9,24,870, not UGRV. I'm only present value of lease payment. So 9,24,870 is present value. So in this question I will write 9,24,870. This you all understood, guys. What is the equation saying? Present value of lease payments is substantially equal to the fair value of asset. What is fair value of asset? 10 lakhs. What's the percentage? Around 92.4%. Correct? Into 100 put. That means, hey, in 3 years lease itself, you almost paid off 90% of principal. Correct? That means 90% of principal is already repaid in the form of MLPs. That means the first condition is met. Which condition is met, guys? First condition is met. Are you following? Idhe sum, if the percentage is, for example, 20%. When sir 20% will come? I'll tell you classic example. Imagine you all plan after exam and go to Goa. Okay. Now in Goa you took an Activa on rent. Okay. Activa is 50,000 rupees. When you are in Goa, you need the bike for hardly 5 days, or 10 days you will take. Each day they will charge 200 or 500 rupees rent, guys. Okay. I stayed in Goa for 10 days. I took the bike on rent for 10 days. 500 rupees. Into 10 days, how much? 5,000. Now, the percentage of the fair value that I have paid in terms of lease payment is only 10%. That means this is not a finance lease. It's only an operating lease. You are just using for those 10 days. Are you getting it? Understood, guys? So in this question, it is what, guys? Finance lease. With that, this question comes to an end. They asked only two things in the question. What are the two things they asked in the question? State whether it is a finance lease. Of course, finance lease, because 92.4%. Also calculate unearned finance income. First of all, UFA will come only for finance lease. Are you following, guys? This question is done. Since we went to indicators, let me finish other indicators. The lease period is for major part of the economic life of the asset, even if it is not transferred. Economic life, now overall life of the asset. What is the life of a car? 15 years, okay, 10 years, whatever. In the 10 years, I gave lease for 8 years. Are you following, guys? That means almost for a major part of the life, same person had the asset. Are you following? Okay, sir, if you take Goa, Activa, it goes to 100 people. Activa life can be 5 years. In that I used 10 days. It's not a finance lease. Sir, I went and settled down in Goa, sir. I took that bike. I took it on rent for 3 years. Okay, you took on rent for 3 years. The amount you paid is much more higher than the purchase of the Activa itself. And you spent for almost its full life. Then it becomes finance lease. The shopkeeper in Goa is not going to account as per AS 19, but example solra. Okay. Next, the lessee has the option to buy the asset at the end of the lease at less than fair value. This only we saw in Swiggy example. Swiggy had the option to buy the asset at the end of the lease at less than fair value. Correct? The asset, he was able to pay only 20k and buy the asset. Correct? Are you getting it, guys? Sir, in this question, we told GRV is 0. No option to buy, no, sir. Correct? Any one condition met na enough. In this question, there was no option to buy. Correct. Third condition is not met. But which is met? First is met. Any one. Second also is met. Lease period is 3 out of 5 years. Are you following, guys? Next. The nature of the asset is a specific purpose asset. I did it just for you. Okay, you asked for an asset, so I constructed the asset and I gave it to you. Generally, if you see all these ATM machines in bank will not manufacture. Some other vendor will manufacture the ATM machine. He won't sell to the bank. He will give it to the bank on lease. But that ATM will go anywhere else. Angada irukapodhu full life, correct, unless someone carries and goes. So, it's a specific purpose asset specifically made for you. Are you getting it, guys? Okay, understanding. Next, the lease, that ownership is transferred at the end of the lease term. In Swiggy, I have the option to transfer ownership. So in these 5, any one satisfied, it becomes finance lease. None satisfied, then only it is an operating lease. Are you clear, guys? I started off the standard by saying what's operating, what's financing. Clear, guys? Additionally, 3 more indicators they have given. See, even if all are satisfied, it's not a finance lease. Be very clear. I started off the standard with that. 8 points are there. First if I any one. In next 3, even if all 3 are satisfied, in these 5, any one should be there. That's basic. Here I got 0 out of 5, sir. Here all 3 I got 3 out of 3. No use. Are you following, guys? Depends on facts and circumstance. Here very simple. Lessee can cancel the lease. I purchased iPhone on Flipkart. I have to pay EMI for 2 years. After 1 month I cancel. That is one. Then loss or gains in fluctuation accrued to lessee. Okay, that's fine. That loss goes there. and lessee can continue the lease at secondary period rent for lower than market rate. That means out of 5 years, if 3 years gets over, or out of 5 years, 4 years got over, again I can do a release for a lower period, lower amount. Are you following? That's it. Are you following, guys? Clear? Okay. Now who will charge depreciation for lease? Finance lease, no. Lessee. Operating lease, no. Sorry. Finance lease, no. Lessee. Lessee. See. I didn't expect you will get confused here. In finance lease, okay, who will charge depreciation? Lessee. In operating lease only, who will charge? Lessor. I gave example. Operating lease is like house rent. This is like taking the BMW car. This we already answered. Correct? Clear? Now here operating lease, lessor will do depreciation based on the useful life of the asset, because it's mine anyway. Here also finance lease, lessee should do depreciation based on useful life, on the assumption that if the let's say Swiggy car example, car has life of 10 years, but I took lease only for, I will still charge depreciation for 10 years because I'm going to take ownership. So once I take ownership, I will continue to charge depreciation. But if you are very clear, you are not going to take ownership, you are going to use only for, then you have to charge depreciation based on lease period. Are you following, guys? This only I have it over here, guys. Look at this. Depreciation is provided in the books of lessee in case of finance and lessor in case of operating. Look at this. What is the, in case of finance lease, depreciation should be provided based on life of the asset and not lease period. Look at the main life, not lease. However, if the lessee is not going to take ownership, I don't want the asset, I'm going to give it back after lease, then you charge as per lease period. Getting the logic here? That's it. So we are done with all concepts here. Yeah, here this we finished already other day. Sale and leaseback only is pending. Yeah, that's it. We can come back to sums, guys. Okay. Now what is left in sums, I'll tell you. Yeah, now we'll do a light sum just for relaxing. Question 1 we have done fully. Question number 4 is done. Now I want to do 5 and 3. Okay. These are two small sums. Nothing that great. Just small sums we will do, guys. 3 more sums. Another 30 minutes standard will be done. Recording, go to the next recording. Yeah, you just watch the next part just to ensure it's each video is 1 hour for you guys. Already you all must be drained out. Okay. Okay, welcome back, guys. I hope recording students also immediately went to next video because we are resuming immediately, guys. Even though students are tired here. Question 3 is fairly simple. Here now, so far we have been doing finance lease. One dabba question just for time pass. In operating lease, again study mat test your knowledge question 11, new question not yet tested. This is simple basic maths. If you're good with little bit of numbers, you will be able to do it. You don't need AS19 knowledge and all. Okay, a mission was given on 3 years operating lease. Operating lease, now this GRV, UGRV, JIL, nothing will come. Okay, operating lease by a dealer of the mission for equal annual rental to yield 30% profit margin on cost of 1,50,000. That means operating lease in mind ku vandale, think of rent. Think of what, guys? House rent. Think of Goa, bike rent. Just giving on rent, rental income. That's it. Are you following? Yes, what happened, all of you? Tired? Okay. Okay, let's proceed. Okay, so he wants how much income, guys? 30% margin on 1,50,000. I want you to participate. So 1,50,000 is going to be the cost of whatever it is. He wants 30% margin. So plus 30%, how much will get, guys? 1,90,000, yeah? 95,000, correct? Of course, it's 1,95,000. You should be able to do without calci, guys. 10% 15 into 3, 45. 1,50,000 plus 45. 1,95,000 is going to be my, what to say, total returns that I want. Economic life is 5 years. We don't care because it's not a finance lease. He's saying it's operating. And output from the missions are estimated at 40,000, 50,000, 60,000, 80,000 and 70. So output of the mission for the next 5 years. But I'm giving only for 3 years. Straight line depreciation in proportion of output is considered appropriate. So depreciation is not on the basis of straight line, not on the basis of WDV, in the ratio of output. What's the value of the asset? 1 lakh 50. Okay. Okay. These are the facts, guys. So what are the facts you've learned so far? 1 lakh 50 is cost. I want a profit of 30%, so 1 lakh 95. They are given output of 5 years. They told depreciation also. Ratio, in the ratio potruvom. Just now we did AS 28. So you're expert in, sorry, 26. So you're expert in ratios. Okay. So now what I'm saying, compute the following. Annual lease rent. Lease rent to be recognized in each of the operating year, and depreciation. Two things, guys. 3 years old depreciation, 3 years old income. So my P&L will have income, depreciation. That's it. That's all I want to know. Correct? Income we will do first. Income we will do first. Very simple. Answer also is there. 1 lakh 50,000 plus 30%, which we saw was 1 lakh 95,000, is the return that I wanted. Correct? Now, has he told equal rental or unequal rental? Equal rental. Equal annual lease rental. So look at the answer. It's very simple. Where is this question number? 11. 1,95,000. I'll just take it here just to save time. Okay. Now, look at this. Where is it? 1 lakh, 130%. Yeah. Purila. 195 is here. Where is it? So if you see, yeah, correct. I was looking for 195 just to check the answer. So 1,95,000 is our income. Now you tell me how I will compute annual lease rent. Now follow carefully. This 1,95,000 I should not get within 3 years. I have to get it over the next 5 years. Correct? That's what it's given, guys. Over the next 5 years. Correct? Are you following, guys? No, in mission was given on 3 years operating lease by dealer of the mission for equal annual lease rent to yield 30% profit on cost of 1,50,000 economic life output. So I am going to use for 5 years. In that 3 years he is taking rent. 2 years somebody else will take. Yanak in the 5 years, within 5 years I have to get 1,95,000. Now how to do it? I can simply divide 1,95,000 by 5. That's it. No, normal sum I can do 1,95,000 divided by 5. Whoever is taking the rent, pay this. In Goa, the one giving bike, he won't differentiate you based on where you came. Give the Aadhaar card, take the bike and go. Correct? So here, but the question is very clearly told, output is different each year. That means what I have to charge should be based on the output. Let me explain the answer here. Look at this. What they have done, guys, look at this. Output during lease period divided by total output. So what is output in lease period? I'll explain, guys. 40,000 plus 50 plus 60. I'll tell the logic. In study mat only they've done it shortly. We'll do detail. What is the total of this? 1,50,000. Out of the total is how much? 3 lakhs. That means, can I say 50 percentage? Sorry. 1,50,000 by 3 lakhs now. This by this. Okay. Correct. Okay. Okay. So 50 percentage of the production is used. Correct? So that means out of 1,95,000, now I have to recover 50%. Are you getting it? How much is that? 90? See, if you look at this, you may or may not understand, guys. Absolutely, it's fine. Now let me explain. Look over here itself. Okay, simple. Totally, I want 1,95,000 gain. Okay, for how many years? 5 years. For the 5 years, for full 5 years. See, 1,95,000 should be my gain for full 5 years of the project. Correct? In that, see, guys. Let's say I purchase this mic. Okay, I'm going to give it on rent to whoever wants to use this mic. I'm renting equipment. Okay. எனக்கு என்ன கோல்னா in 5 yearsல I should recover 1,95,000. Now Harish is coming and saying, sir, I will take for 3 years. No, I can't recover fully from him. I should recover proportionately from him. What is that proportion? In my output, because they're saying output, out of 3 lakhs, now I am manufacturing 1,50,000. That means 50% of what I want I should get from Harish now. So 1,95,000 into 50% gives me 97,500 I should recover from Harish in the first 3 years. Divided by 3 is how much? Equal 30. 32,500 if I get per annum, that's enough. Sir, what about the remaining 97,500? Year 4 and year 5, somebody else will take on rent. I will put on his head. Sir, why are you doing like that? Because they are given ratio of output. Are you following, guys? So if I go look at the answer now, 32,500 is the thing each year. Sir, you have complicated it so much, sir. Very simple. Find the profit 1,95,000. In that, how much percentage is work is done now? 50%. So 50% I will recover now, 97,500. In how many installments? 3 installments. That's it. Is that clear? Understood, guys, all of you? Simple. Percentage of completion method. Are you following, guys? Or how much I want? How much work is done? Apply percentage. Next, depreciation. Fairly very easy. Let's not even look at the answer. You guess, guys. What is the cost? Depreciation will be on cost or profit? Cost. So depreciation can 1,95,000 I should not take. I should take only 1,50,000. This should be for how many years? Year 1, year 2, year 3, year 4. In what ratio? 40 is to 50 is to 60 is to 80 is to 70. That's it. Are you following? That's what they would have done here, guys. Look at this. And the ratio பண்ணிருக்கான். Lease rental or depreciation. Depreciation should be in the ratio of 40 is to 50 is to 60 is to 70. Are you following, guys? All of you with me, guys? Just like what we did in intangible assets. Are you following? Okay. Now, annual lease rental is 32,500. So let me write year 1, year 2, year 3. Okay. Quickly. Can I write 32,500 each year? He will pay me 32,500, but I have to account on accrual basis. Because my depreciation is going to be, I'll just take the values from here to save time, guys. Depreciation is 40 is to 50 is to 60 is to 80 is to 70. Are you clear with that? So it's going to be 20, 25 and 30. So 20k, 25 and 30k. Now, matching concept. If depreciation is going on this ratio, income I cannot take in the same ratio. So what I receive will be 32,500 each year. Rent is that. But accrual concept la, the same 97,500 also will be split in the ratio of production, which is how much, guys? Yeah, same 40 is to 50 is to 60. Look at the same one. 40 is to 50 is to 60. So 40, 50, 60, that's 26, 32, 500, 39,000. Let me write here and explain. 26,000, 32, 500 and 39, no? 39,000. So then what are you trying to do? When I get the money, see, I will recognize revenue for 26,000, but he will pay much higher. Are you following, guys? See, it is like he is paying advance. What is the amount he is paying every year? 32. So he might pay 32,500. But this year I will show only 26,000. Rest will be advance. In second year, I will also ask him 32,500. He will pay me 32,500. In third year, I will ask, he will pay me only 32,500. But I will account income for 39,000. So that advance will be set off here. Are you getting it, guys? Are you all following? Simple, guys. He is paying on cash basis. I am accounting in accrual basis. The accrual basis accounting. The accrual basis accounting on expense and income side. Both is happening in the ratio of output. Are you following, guys? Are you all with me, Harish? No, not following. See, these are sums like this which you see once now. Now if it comes in exam, you will know what to do. So let me just summarize the whole sum once using this itself. Mission was given on 3-year operating lease by dealer of the mission to yield 30% margin on cost. Okay, see this, what you are saying is, one second. So his interpretation of reading is, leaving it's subject to interpretation to be honest. A mission was given on 3-year operating lease by a dealer for equal lease to yield 30% on cost. So I can actually read this also as, in 3 years I want to recover the full 1 lakh 95. I already told you in previous class, like this, when there is a confusion, subject to assumption, we will go with what ICAA is doing. That's it. Okay. Same thing if you do for 3 years now, we will not do this in a proportional, we will not do 50%, we will not do full 1,97,000 divided by 3. Okay, so now look at this, what's basically going to happen over here. I will just summarize the whole question, guys. Once I summarize, I think you get clarity. Simple. 1,50,000 I want 30% profit, so I'm getting 1,95,000 as gain. This gain I have to recover within 3 years, but I can't recover fully, not 3 years, 5 years. How much to recover in 3 years? Based on percentage of output. Now in 3 years only 50% of output is done, so I'm multiplying with 50%. You get 97,500. I will bill you 97,500 divided by 3, 32,500. So every year the lessee will pay me bank account debit to income, bank account debit to income, bank account to receivable, 32,500, 32,500, 32,500. So on cash basis, what I am receiving is 32,500, 32,500, 32,500. But we follow accrual because this question is very specifically saying what? Question is saying, look at this. Straight line depreciation in proportion of output is considered appropriate. We are considering this appropriate for both income and expense. So depreciation also is spread in the ratio of output. Income also is spread in the ratio 97,500 in the ratio of output. That's it. Are you following? They are not asking you in this question how much is advance first year, how much is deficit next year. We just discussed roughly without the numbers. Are you following, guys? Clear? Yes. His doubt is, what if it's I have to do for 3 years, correct? Correct. Then, so you are saying, what if the 1 lakh, alternate question, guys? We have finished the previous question. Now we are going into students' doubts here. Sir, what if the full 1,95,000 should be recovered within 3 years? Then we did one step in the middle, into 50%. That answer we divided by 3. அது into 50 லாம் பண்ண வேணாம், 50 பண்ண வேணாம். Straight away I'll divide by 3 years. How much you're getting, guys? 65,000 will be the cash received in all the 3 years, and then this 1,95,000 will be split in the 3 years in the ratio of 40, 50, 60 for accrual basis. Are you following, guys? Same steps. What you will skip if I'm closing in 3 years and the into 50% panni, we are only accounting half income now. That part we will skip. Are you following, guys? Clear? I'm trying to make you ready for exam conceptually. That's it. Okay. Done? Yes. Why we are taking for 5 years? See, to be honest, question can be a little more clearer. Economic life 5 years only, lease 3 years, we are not taking 5 years. We are just assuming that this income that he wants to earn is from the total life of the asset and not the 3 years. That's it. Okay. Second method la panningna. That's what I'm saying. Same thing he also asked. The ISM answer is given like this. Should I take 3 or 5? I already told you, whenever there is confusion like this, question is not clear, we will go with what? ISM answer. Are you following? See, being honest, whoever is going to read, they will give some lame explanation. But English la parchingna, it looks like I want this whole profit for whole period. Correct? So we take the assumption of ISM. Are you getting it? Like, see, now if you're thinking, ISM assumption, wait for final. Are you enjoying AS19, this lease computation, discounting computation, this computing present value, doing reverse working the previous sum? We did that GRV was 0, UGRV. if you enjoy these two standards, okay, AS 19 and AS 15, full CA final is the AS 19 and 15 computation. The full CA final FR will be like this only. Present value, discounting factor, reverse this, that. Okay. Full CA final, don't worry guys. That இதே computation will come in ESOP. இதே computation will come in all standards except few AS 4, 5 types. Okay. Fine. Yes. Any doubts? Let me do one last question. Question number 5. I'm not going to do this question. This is not an illustration. This is example in study mat, which can be a separate illustration because in old syllabus this was illustration. They made it example. The same concept is there in group 2 FM. Okay, it's there in group 2 FM. If you know group 2 FM, it is very easy. Okay, here I'll explain the concept guys. Look at this. This also is another reverse working of finance lease guys. Follow very carefully. I'll tell you how to do it because we don't have much time. I will not do the whole sum. I will only focus on the core part. Okay. Remember we had year 1, year 2, year 3. Cash flows was, let's say, here 8 lakhs, 8 lakhs, 8 lakhs. We have to discount it. Answer depends on what is the discounting rate, correct? Now imagine I give you a question and tell you answer has to be 15 lakhs. Find out at what rate if you discount you will get 15 lakhs. Is the next question. Are you following guys? Are you following? This concept is called present value of GIL is equal to fair value. Just now we did the sum. 10 lakhs equal to. They are equal at what rate? That means this question is nothing but finding out what is the IRR. In FM you have a sum called interpolation. Interpolation on FM is the same thing. Okay, that same thing is there over here. So if you look at this question, I won't be spending much time. I'll tell you how to do for exam. Are you all with me guys? Because it's not even illustration. They would have given the same dabba. Look at this. Instead of 8 lakhs in our example, here 50k at the end of each year. So visualize the table. Year 1, 2, 3, 4, 5. How many years? 5 years. Visualize 50k, 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 50k. Are you following? Then GRV 25, UGRV 15. Am I doing this for lessor or lessee? They have not given anything. So lessor. I'm doing it for lessor. So I will take both GRV and UGRV, both I will take. So here I have to write 50k, 50k, 50k 5 times, then GRV and UGRV, and then he straight away coming to question. IRR na enna solran? IRR is the rate at which present value of lease payments and UGRV is 2 lakhs. Then he is saying present value of lease payment and UGRV is guessed at 10. That's summa because it's example. This guessed rate may not be there in exam. Okay, the question will end with this. So what you have to do in main exam, what you have to do guys, first randomly you take any rate of your choice. Okay, what is, look at this, fair value is 2 lakhs. Look, I'll tell you, fair value is 2 lakhs. Let me do the same thing here. It is going to be 50k, 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 50k and 50k. Are you following guys? Okay, and then GRV is how much? How much was GRV? 20 and UGRV 15,000. What you have to do? You have to guess any discount rate of your choice. 10, 8, 12, 15, 20, your choice. What is the answer I need? 2 lakhs. Correct? 2 lakhs from the overall. So what you should do? You have to first randomly guess it. Let's say you are guessing at 10%. Okay, 10% if you are guessing. Let's say your answer is 2 lakh 15,000. Random. Okay, I'm just doing random. But I need how much? 2 lakhs. So discounting factor should increase or decrease? Higher the discounting factor, lower the present value. Correct? FM concepts, foundation, time value of money, all this is there. Okay. So I have to increase it. So let me take it 15%. Then I might get at, let's say, 1,85,000. Random numbers, these are not correct. So you have to keep guessing in how many ever times it takes. But once you practice, you will know. You need to get one number above 2 lakhs and one number below 2 lakhs. That means at 10% if I'm getting 2 lakh 15, at 1 lakh 85 if I'm getting 1 lakh 15%, then the answer is somewhere in middle. Then only it will come to 2 lakhs. Are you following, guys? Now let me apply the same concept in this question and take the values that they have taken. Take the values that they have taken, and then I will teach you. Example 1. Okay, example 1 is the one. Yeah, look at this. In example 1, if you see, they have taken the same thing. Look at this: 50, 50, 50, 50, 50, 25 and 15. They have taken discounting factor 10%. 10 ertha, they are getting 2 lakh 14, 340. This you know how to find. 10 put an hour, you know to find. That only I am going to take. Rest I will solve. Okay. So if I take 10%, you are getting. Okay, let me do it like this. So if I take 10%, you are getting 2,14,340. Pakava, clear? Again, I'm repeating, guys. This time, this kind of a sum is only in example. Old syllabus, it has come in exam itself. It was part of illustration. So now, because at 10% I'm getting 2,14,340, I have to take higher or lower? I have to take higher. So if I take higher, here they have taken 14, guys. 11 edukkalam, 12. Better to take some more 5. Okay. 14 edutha, it's coming 1,92,360. This you know how to multiply, guys. So if I take 14%, you're getting how much, guys? 1,92,360. 1,92,360. Till here, have you all understood, guys? Because I am not solving, I am just taking the values. What is the goal? 2 lakhs answer now, 1 above, 1 below. Are you all getting it, guys? Understanding? Are you all following? Okay. Now, I need answer of 2 lakhs. Correct? I need answer of how much? 2 lakhs. Are you all with me? So, if 10% I keep increasing somewhere, this will keep decreasing, and it will hit 2 lakhs. So what is the variance needed? 2 lakh 14 minus 2 lakhs is how much? 14,340 is the variance needed. Correct? Now what is the overall variance here? 4%. Correct? When it was 10%, it was 2 lakh 14, 340. When it was 14, it was 1 lakh 92, 360. That means, can you tell me the difference between 2 lakh 14, 340 and 1 lakh 92, 360? This extreme. 21? That's it. Now I'll teach the logic. Then you go and see the formula in the book, and then you understand whatever you can. Now look at this. What I am saying. Now look at this. What I am saying. I am only telling you maths, guys. When the percentage is changing by 4%, the difference in amount is changing by 21,980. Correct? It's changing from here to here, 21,980. It's changing to 21,980. Are you all with me, guys? Okay. But I don't want a change of 21,980. I want only 14,340. So if I want 14,340 as a change, what could be the percentage? So I will do cross multiplication. It will be 14,340 into 4% whole divided by 21,980. How much you are getting? In percentage. Into 100. 2.60. Correct? So what in percentage you are getting? 2.6. So let me again repeat, guys. When it was 10%, it was 2 lakh 14. No. I want it to drop more. So when 10% keeps on increasing, it will somewhere reach at 2 lakhs. So what I did, I'm trying to find the both extreme. At 10% it is 2 lakh 14. At 14% it is 1 lakh 92. 1 lakh 92 360. I need to find something mid. So first I'm writing extremes. So for a 4% change, 21,980 changed. But I don't want a 21,980 change. I want only 14,340. In the 14,340 drop H now, I will get here. So value should drop. So for 14,340 value drop, 2.6% if I increase my percentage. See, I told here you have to increase the percentage. So 10 plus 2.6 if I increase, you will get something close to 2 lakhs. So my answer will be 12.60%. I don't know if it's correct. It should be something around that. Yeah, 12.6. Sir, இது இப்படிதான் பண்ணலாமா? What about the other side? Other side also you can do. From 1,92,360 for it to become 2 lakhs. What is the difference here? 7640. Correct. So instead of writing 14,340, let me write 7640. So now this time my multiplication will be 7640 into 4% divided by 21,980. Here what I am saying guys, any side you can do. Onnu panna podum. So 21,000 ku 4%. I want only 7640 change. How much you are getting guys? 1.39% approximate. There we added. So here 14% decrease panada, this will increase. So 14 minus 1.39% approx, you should be getting the same 12.61 or 12.6. Are you getting it guys? If you actually check for 12.6, it will not be exactly 2 lakhs. Rounding off difference only will be there. Are you following guys? Understood? This is called interpolation. How many of you learning this for the first time? Anybody here? Interpolation first time? Harish? Understood? Sure you're understanding? Okay. Suma kai thukniya first time? Okay, fine. Done. So with this, we are done in AS 19 la core sums of finance lease and operating lease. This is one type of a sum where they ask you to find IRR. Then this is another type of sum where missing figure, GRV 0, UGRV given, MLP missing figure, annuity factor division, and also testing if it's a finance lease or operating lease. Then next type of sum is study mat operating lease, just now we saw. Okay, new sum not yet tested. And then first sum la I taught you so many use cases in that. Only one more question left in our workout. Different type of sum is a separate concept in our note called sale and lease back, and then I should do red flags and that's it. We'll be done with this. Are you following guys? That's a small concept, sale and lease back, which I will do now itself. But recording, just go watch the next video because you will have this concept in that sale and lease back separately. That's about it guys. We'll go to the next one. Recording, don't worry. Immediately go watch that. It will be a 20-minute discussion. So let's start off guys. Sale and lease back. Last concept left in AS 19. Again this, if you learn the concept like previous things, we don't need the formulas. Let me take an example. Let's take two good friends. Okay, we'll take two good friends. Let's say we have Harini and Divya. Okay, let's say this is Harini's business, Harini Limited. She's doing the business for a long time. They both are good friends from childhood. Okay, now Harini is in trouble. She has, I'm only taking extract of balance sheet. Don't be like balance sheet tally alone. PPE she has 100. Loan she has 100 that she has to pay to the bank. She doesn't know what to do. Business is not going on well. She urgently needs cash to pay the loan for working capital, whatever. She needs some money. Or let's say even if she doesn't have loan, let's say she's in trouble. She needs urgent money to run the business. When she was going out with Divya, she was telling this is the challenge. Bank pona loan kodukka matinganga. Of course, business is in trouble. What to do? So Divya is saying, okay, fine. Do one thing. You sell your PPE to me. I will buy it and give you money in solra. Harini is like confused. Ayo, I should sell my asset to you. So Harini is here. Divya is here. So Divya is saying, you sell your property, plant, equipment to me. I will buy it from you. Harini is little confused, but she is blindly trusting Divya and saying, okay, fine. Let me do it. So she sold the PPE for 125. How much guys? 125, and she got full money. Bank how much? 125. What will be the entry for the sale? Bank account debit 125 to PP 100 to profit PNL 25. In the asset law 125 nobody will buy. It's not even worth 50 because friend help she bought it for 125. So what happens now? This PPE will go off in the books. It becomes 0 because I'm just giving effect for this entry. I'm giving effect for this entry. And then bank becomes 125 and also reserves and surplus. You have a gain of 25. Now Harini is saying, okay, fine, thank you so much for the money. Now I'm happy. 125 bank balance looks good. So I have a lot of money. Now Divya is saying, free alarm I didn't give it to you for free. And Harini also is saying, see, I have a bank balance, I have profit, but asset illiye. What business I'll do? Are you following guys? We need asset to produce goods. No, I don't have asset. What I'll do alone with the money? I'll give interest to loan for others. So what actually will happen? Divya is saying, I will give this asset. You sold it. I will give the asset back to you. I'll give the asset back to you itself on a lease, on a finance lease. Oh, so she's getting the asset back on finance lease. So what is happening? Harini will now get the asset back into her books for 125 and she will have now a lease liability 125. Are you following guys? She now has a lease liability of how much? 125. Are you following? So essentially what happened? Here what was there earlier? 100 PP. Now can I cancel this 125 with this 125? And this PP 100 became 25. That's why 25 is gain. So let me again repeat. Have you understood till here? Guys? First what is happening? 100 rupees asset is sold for 125. So I got 125 cash, I got 25 profit. Then I took the asset back on lease. So asset came back to my books for 125. Lease also is for 125. Is this clear? But in reality, asset never left Harini's building itself. It's here only. Are you following? They just passed book entries. A friend is helping her. So because of two book entries, what are the two book entries? One sale and getting the asset back on lease. Look what is happening net effect. Earlier what was there guys? Only 100 was there. What was there? Only 100. That is replaced with 4 values. What is implication now? That means, can I say, instead of calling this a lease and all that nonsense, Harini just took a loan of 125 from bank. Correct? She wanted 125 cash. She got 125 cash to do her business. She got, if it was bank, it will be bank loan. Correct? Instead of bank loan, you are calling it lease liability. Are you following guys? That means, can I say, these two will get knocked off here. Asset la bank 125, liability la 125 loan, knock off. Clear? And here in PPE, what was the earlier value? 100. You made it 125 by selling and again leasing back, and you also recognize the gain of 25. Loss making company, you are showing gain of 25. Fraud. 2 frauds. Are you following guys? So what the standard is saying, okay, this is a sale and lease back, but in essence what they are saying, treat these two as a normal loan. Treat these two as a normal loan. How you pay interest. Don't treat it as a lease in solran. Standard is saying don't treat it as a lease because it's not a lease. Okay, treat this liability and bank as a normal loan. How do you treat normal loan? You pay interest. Okay, they are saying this 25 also, 100 became 125. So you got extra 25. This 25 also they are saying don't treat as P&L account. Don't treat as P&L. Basically what Harini did, she did revaluation of asset. 100 became 125. So this 100 became 125. So this extra 25 will be in reserves only, but it will be treated as a revaluation. reserve, that means it will not go to my P&L. Now look at the impact in P&L for you to understand the treatment. Okay. Before, what was there? Very simple. I had asset for 100. I had asset for 100. If my depreciation is 10%, earlier life was simple. Always life was simple earlier. Depreciation 10. Correct? Depreciation is 10. That's it. Now what you did? You complicated. Okay. We only complicate our life. Look at this. 4 things came off. Okay. First, now PP from 100 became 125. So again same depreciation at 10%. Depreciation will be 12.5. Depreciation will be 12.5. Along with this, you will also pay interest. You will have to pay interest on loan XXX. Are you following, guys? What I am avoiding is, if you treat this as a gain, you will show 25 as profit and fool all stakeholders. That standard is saying I won't allow. That standard is saying I won't allow. Rather, that gain on balance sheet, I will take it to revaluation reserve. But then what happens now? What happens now? Carefully look at this. If you take it to balance sheet also, still there is some element of fraud. Earlier, if my net profit was 100, sorry, yeah, if depreciation is 10, net profit after depreciation used to be 90. Now if my net profit before depreciation is still 100, now after this it will be less than 90. Correct? Because my depreciation is increasing by 2.5. 2.5 it's increasing. This interest, I understand, it's a genuine loan. See, you got 125. Bank kita vaanganalu, you have to pay this interest. If you take from bank also, you have to pay the interest. So the standard is saying, okay, this is genuine transaction. Let's leave it aside. Because I'm going to pay interest, you have taken loan. But what is happening? Now net profit after depreciation is going to become 87.5. Now because of your fraudulent nature, being a fraudulent person, in the sale and lease back, your net profit dropped. Income tax also will be reduced. Correct? So what standard is saying, see, we don't want all these confusion. From revaluation reserve, I will transfer back to my P&L every year the excess depreciation which is charged because of the increase of asset 2.5. So what is that? 25 into 10%. Same rate of depreciation. So before, what will happen? Very simple. I used to have before what, guys? 10 depreciation. Now instead, now I will have 12.5 depreciation, and credit I will have revaluation gain transferred back to P&L 2.5. So net to net profit will be how much, guys? Net profit will come back to 90. That's it. Are you following, guys? This is sale and lease back, which results in a finance lease. Results in what, guys? Finance lease. So look at this. Sale and lease back, which results in a finance lease. Transaction is simple. We are not doing any sum here. But if a sum comes, you know what to do. The profit or loss, just know we got 100, 125. Profit is how much? 25. Should not be recognized in P&L directly. The gain or loss should be deferred and amortized in the P&L in the ratio of depreciation. Clear? 2.5, 2.5, 2.5. Here 12.5. Clear? Matching, guys. How much ever depreciation increase because of your fraudulent nature, increase credit side, so net profit will be same. Are you following? Sir, what about the interest? That's genuine. You took loan, you are paying interest. Are you following, guys? Sir, I am not paying interest. AS 18, related party transaction. Take care of that. Not here. Are you following? That's genuine loan. Are you understanding? Clear? This is sale and lease back resulting in a finance lease. What I should do in exam? The profit, don't take to P&L. Take it to revaluation, but don't keep there. Keep transferring back to P&L to account for the excess depreciation due to increase in asset. Clear? Understood, guys? Now sale and lease back resulting in operating lease. Now Harini and Divya found out, ayo, idlam panna maatipom. Now if a company does this, who will find? Article. Auditor will not do all this. Article only will dig deep into business. Correct? So article only has to find all of this. Are you understanding, guys? Article has to find all of this. You have to go research is sale and lease back. It won't be as simple as this. Company won't do sale today, lease back tomorrow. You come and find. He will try to construct in such a way, because on the other side of the company also, who is doing that fraud? One CA will be sitting there. So it's CA versus CA basically. Ethical CA versus non-ethical CA. Who is going to win? Okay. Now, Come back, same transaction. Now Harini and Divya, both of them did CA. They said, இந்த மாதிரி பண்ணா மாட்டுவோம். Let's do it in a different way. Same thing. Same thing. PPE is how much, guys? 100. This time they sold it. They sold it for how much? They sold it for same 125. No change of value. Bank 125. Bank is 125. And I have reserves and surplus 25. But if I bring the asset back into my books, I'll get caught. So this time Harini and Divya decided, let me do a lease back as an operating lease. So operating lease na asset will be in whose books? Lessor's book. This is Harini Limited. She sold the asset. She's getting the asset back, but she's getting as an operating lease. That means asset will be in lessor book. Asset will never come back here. Lease liability also will never come back here. Correct? Then where it will go? I have to pay rental, like how we had operating lease sum, I have to pay rental every year. So where the impact will come? That means, now look at this. Here in this case, when I'm doing lease back in operating, depreciation was 10 before. Depreciation was 10 before. Now follow, guys. Now follow. Depreciation is 0. Why? Asset never came back into my books. Good, profit increased. But instead of that, I have lease rental. Operating lease, we don't break into principal interest. House rent, if you're staying in a rented house, should you do breakup of principal interest? No. One rent. So lease rental here can be 10, can be 15, can be 20, can be 5, whatever they agree. Okay. Now the standard says, okay, asset never came back into my books, but I got the money. This is an actual sale. This is an actual sale. Take this 25, treat this 25 just like an actual sale, and recognize this in your profit and loss account. P&L then comes to your free reserves, and anyway depreciation is becoming 0. Whatever is the lease rental accounted as the normal expense. Don't disturb it. Okay, are you following, guys? Clear? But here there is a small catch connecting with AS 10. Only one small catch. Angada we are having some last illustration. Follow. If asset is 100, I sold it for 125. Okay. Let me assume this asset is the book value Nova. Some other time earlier, I would have purchased this for, let's say, 150. And let's say my depreciation is 50. So my current book value is 100. Now I'm taking different scenarios. 100 rupees asset sold for 125. 100 rupees asset sold for 170. 100 rupees asset sold for 90. Okay. Now how to account the gain only sale and lease back. This is the first level example. Next level I will take the book. 100 is sold for 125. What is the gain? Where will it go? Fully P&L credit side. Are you following? You will not get the logic, but you're saying fully P&L. 100 rupees is sold for 170. What is the gain? How much P&L? How much P&L? 50 P&L, 20 capital reserve. 100 sold for 90. What is the loss? This gets debited to P&L. Let me explain the beautiful logic here quickly, guys. Follow. 100 rupees is the asset. But what was the earlier asset price? 150. It was earlier. That means 150 was the cost. It became 100 because you already debited P&L by 50 to the extent of depreciation in the past. That means my P&L already took an impact of 50. Took an impact of 50. Now when I'm selling for 125, in that 50 impact, I'm recovering how much? 25. So I can credit 25. Are you following, guys? When I am selling for 170, your impact is only 50 in P&L. But you sold for 170. That means to the extent of earlier impact, up to 50 you can credit P&L gain over and above of original cost. Hey, 150 asset you sold for 170. That means excess 20 is a capital reserve for you, capital gain. That means in simple, I will tell gain up to original cost. That means what is original cost? Up to. எங்க போச்சு? Gain up to 150. Gain up to 150 will go to P&L. Gain beyond 150 will go to my capital reserve. If I have a loss, debit P&L. Again here one more catch came. Amendment came. That only we discussed. This is what we have. Now the catch is, sir, comparing with 150 is okay because 150 is the original cost. What is cost price for me may vary for cost price for somebody else. Depends on your bargaining skills. How can I keep 150 as benchmark? Now understood logic here. Simple. Up to cost, take to P&L. Beyond cost, take to capital reserve. Less than cost, loss, not debit P&L. But keeping cost as benchmark is not fair because what if Harini and Divya planned before itself and played around with the cost itself? Are you following? So standard is saying beautifully, okay, let me keep the benchmark of comparison instead of 150 as fair value. So fair value அங்க இது பண்ண முடியாது. Are you following, guys? So now they are saying, look at this. Where sale and leaseback results in finance lease, same. Where sale and leaseback results in an operating lease where sale price is equal to fair value. That means my benchmark is not cost price. Same logic. Whatever you saw here only. How your benchmark was what? 150. But that is a manipulative number. So I am changing that to what? Fair value, which is non-manipulative. CA final Ind AS is all about fair value accounting. We have a separate Ind AS. So if my benchmark, that means up to 150 you take to P&L. So up to fair value, if at all my fair value is 150, if at all my cost and fair value is matching, then up to 150, loss, profit or loss should be recognized immediately. Less than 150, sir, sale price, fair value is more. Fair value is more. Profit or loss should be recognized. Okay, this is fair value is more. So let's say fair value is 150, selling price is 140. Okay, but you sold for less than benchmark. What is the loss? 10 rupees. Then the loss should be recognized immediately. However, if the loss is compensated by future lease payments below market price. Sir, I sold for 140 because when I get the lease back from Harini, normally people will pay 30 rupees per month. I am paying only 10 rupees. Are you following, guys? Are you understanding? Normally others will pay 30, but I am paying only 10. That means I am saving a future expense. Then they are saying if the lease payments are compensated by future lease payments below market price, then it should be deferred and amortized over the period. Meaning, instead of taking the full loss 10 right away, they are saying in a place what should have been 30 as lease rental, because of your smartness, instead of 30 you made lease rental only 10 now. Now that loss you bring every year 2. Are you following, guys? I'll again repeat, guys. We don't have a sum in this. We don't have a sum, but I will repeat. See, if there is a loss, debit P&L. Clear? If there's a loss, debit. But the exception for this, I'm again repeating, if there's a loss, we are going to debit P&L. But the exception for this is simple. In future, if you're going to manipulate the lease rental, 100 rupees required a lease rental, if you're showing only as 80, your profit is increasing. So that time, that loss you bring it now. That loss, see, I'll just show you in ledger. Let's say my lease rental, standard market should be 30. Okay. First year I had a loss of 50. I should debit over here, some over. But what I did, instead of showing 30, because of our negotiation friendship, I'm showing only 15. That means this is not a loss. This is not a loss, it's getting compensated future. Now this loss, instead of being accounted same year, I will apportion over the life. So that instead of 50 getting debited 1 year, it might be another, let's say, 10. That means cumulatively it's increasing. Are you following, guys? I'm just managing the P&L. Last case, if sale price is more than fair value, what do you know? Fair value 150 in our example, sold for 170. What is it? Gain. 20 gain beyond fair value will go where, guys? Capital reserve. Since it's going to capital reserve, I will not keep it fully there. I will defer and amortize over the P&L. Like I will keep transferring on proportionate basis to adjust. Are you following, guys? For this only we have a sum, study math sum. Last sum with the AS19 will come to an end, guys. See, some standards I take time because I can't teach shortcuts here without logic. I can't ask you to mug up like 15, 19, 22. Let it take its time. Rest and all less than 1 hour we are closing. Okay, now look at this. Quickly you will be able to answer. Keep in mind, you keep that 150 as base, guys. Look at this. A sold mission having WDV at 40. That means in our example cost was 100. So cost book value 40 for 50 lakhs. Okay, in our example we sold for 125. Here it is 50. The same machinery was leased back by B to A. Lease operating lease avane kuduta. Okay. First case, sale price of 50. 50 is given in question now. Is equal to fair value. That means it's matching the fair value. So what is the gain on sale now? 10 lakhs. Where I will take it? Up to fair value, up to cost price. Where I will take it? P&L. Look at this. 10 lakhs gain goes to P&L. Are you understanding? Are you following? Up to cost. Instead of cost, we are calling it fair value. That's it. This 50, see, sold to 50. They have not given the cost. So instead of cost, he is saying it's fair value. Are you following, guys? So selling price equal to fair value. No, fair value in this case is 50. So up to 50. Second, fair value 60. Fair value is 60. Something which is 60, I sold only for 50. What I told you, up to cost price, gain up to cost price or up to fair value goes to P&L. Because earlier it was debited to P&L. Look at this in the example. Yeah, look at this. Up to 150, whatever gain comes, we credited fully to P&L. Here, what is happening in this question? Fair value is 60, but I sold only for 50. So I have not gone fully till there. So again, gain is how much? Gain is always going to be same. 50 minus 40. 10 lakhs gain will go to my P&L again. Are you following, guys? So keep in mind, fair value is cost. First case cost was 50. Second case cost was 60. Original cost is 60, but I sold only for 50. So still there is some bandwidth for me. Third case, now they are changing fair value. Fair value 45. Keep in mind, fair value 45 now, book value is 40. Okay, that means 45 became 40 and sale price is 38. That means you sold at a loss less than book value. When you sell at loss, what's the logic? Immediately debit P&L unless fraudulent. Unless they're reducing what? Future rent. Look at this. 2 lakhs loss to P&L. I didn't write that point, but 2 lakhs loss to P&L. In the point one, this one. Look at this. P&L should be recognized immediately at that point. However, if loss is compensated by future reduction in lease payment, then you will amortize it. Are you following? That depends on the question. They have not given data here, so we are not taking an assumption. Now you will be, now the last three, at least two you should get correct. Fair value 40, book value 40, both same. Book value 100, cost 100. Fair value 40, book value 40, both are same. It is sold for 50. That means you are selling for higher than fair value. Are you following, guys? See, my benchmark is 40. Fair value is my benchmark. Benchmark is 40. You are selling higher than 40. So how much is the gain? What is it? Can I recognize immediately? No. You will take it to your reserves and defer it. Defer it. That's what look at this. 10 lakhs to be deferred. Now we are getting the clarity of fair value will be my benchmark. Now we try to answer this. Fair value 46. Book value in all the cases is 40. Book value all the cases 40, fair value 46. Konja gap, there is some gap. Sale price 50. Oh, look at this now. Look at this beautifully over here. 46, 50, 40. I'll write it separately here. This case, see if you're able to answer. Book value is 40. Fair value is 40. And I sold for 50. Correct? So, gain up to 6 goes to my gain beyond my benchmark 4 will be deferred. Correct? Are you getting the answer, guys? Look at this. Recognize 6 now and 4 lakhs to be amortized. Are you following, guys? Understanding? Are you all following? Now, last case only. Follow, guys, carefully. Fair value 35. Fair value is 35, but book value is 40. Are you getting it? How is that possible? Benchmark is 35. My book value is 40. means already you increased it for some other reason. Looks fishy, yeah. Looks fishy. Look at how is this possible? Or benchmark 35 na, book value should be less than the benchmark, but book value is set 40, higher than 35, and it is sold at 39. Now with the gain or loss? Are you getting it, guys? If I compare with the book value of 40, it's a loss. How much? Book value 40, sold for 39, loss of 1. But if I compare with fair value 35, sold for 36, you have a gain of 4 lakhs. Are you following, guys? So 40 is, so what they're saying is a special case over here. What's the special case? Look at this. Book value is anyway 4. So when I pass the entry, I anyway have to write first bank account debit 39 எழுதியே ஆகணும், because I got 39. And book value is how much? 40. அதை close பண்ணுமா? So I will write 2 asset 40. Therefore how much is there? 2, oh sorry, P&L debit is 1. This is the net. P&L debit is 1. Now look at the final answer. Recognize 5 lakhs loss now, gain of 4 lakhs. That means what is net? Are you getting it? So special case is basically bank account debit 39 to asset 40. My net loss is 1. But that 1 lakh loss I am writing like this. How I am writing, sir? I am writing as gain. I am writing this keeping benchmark. I'll show you again. 1 second. Let me explain this alone. I want you to have clarity because it's the end, guys. Look at this. When I pass the entry, bank account debit is 40 to asset 39, loss account debit 1. Is this clear? Loss is 1 if you compare with book value. Correct? I want to compare. Are you following it? This you understood? This is normal transaction, correct? Normal transaction, book value is 39. Sorry. Book value is 40, sold for 39. Sold for... Yeah, sorry. I just wrote the entry wrong. I just got... Yeah. Okay, we'll just rewrite again. Follow, guys. Last case. Asset value in books is 40. 40. Book value. I sold for 39. Loss is 1. Is this clear? This is the final answer. Okay. If AS 19 is not there, இதை போட்டு நான் போய் வீட்டுக்கு போய் தூங்குவேன். Okay. Correct. If AS 19 is not there, follow carefully. The special case only they will test. What you will tell? 6 points are there, sir. First 5 I understood. 6th தான விட்டுறலாம். அதான் வரும். Okay. So I want you to understand this, guys. Just if you have spent time till here recording, don't give up over here, guys. Look at this. One of the difficult standards. So follow. Asset or a book value is 40. I sold for 39. So I have a loss of 1. This is as per AS 10. Normal sum done. Correct? But AS 19 says you guys did sale and lease back as operating lease. So my benchmark for comparing profit or loss is not book value. My benchmark is fair value. And the fair value amount over here is 35. Okay. So assuming asset of 35 is sold for 39, you have a gain of 4. Are you following this? Assuming asset of 35 is sold for 39, I have a gain of 4. Are they book value asset of 40 dropping from 40 to 35, because we never saw a case where fair value is less than book value, then this shows a loss of 5. So as per AS 19, I will account like this, which is nothing but the same 1 lakh loss. Why are we doing it? Just to give effect for sale and lease back as operating lease, because in all the previous case, I computed profit loss, not keeping book value as base. We kept what? So fair value and a besa vechana, two things are happening. Something worth 35 is sold for 39. So you will get a gain of. But at the same time, something worth 40 in the books has a drop to 35. So loss of 5. It's just the presentation gimmick. Are you following, guys? Understanding? To check you pass AS then entry. Clear? Are you following? That's what I wrote as special case. Yes. Correct. So recognize 5 lakhs now. Why? Because 40 immediately dropped to 35. Yeah? Correct. That means no simple. If if selling price is more than benchmark, what are you doing treatment? If selling price is more than benchmark, you are deferring the gain. So my benchmark here is how much? Selling price 39. So it's more than benchmark. So 4 I am deferring it. That's all. Correct. Other reduce பண்றோம். So இங்க எப்படி ஆகுங்கன்னா step first அந்த 40 நான் 35 ஆக்குறேன். So for that entry will be P&L account debit 5 to asset 5. So 40 became 35. Yeah? So my new benchmark is 35. Now this 35 is sold for 39. So my benchmark 35 is sold for 39. I have a gain of 4. Whenever I get gain, I will defer it. Net 1 lakh loss. Correct. 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 Double work from 40. From 40 I will bring to 35. From 35 again I will take to 39 because book fair value is base. This is a special case. What is the case? The case will come where the fair value is less than book value. Which one? Correct. Revaluation loss now. 5 lakhs loss no. Revaluation loss எங்க போவீங்க? P&L தான் அடிப்பீங்க நீங்க. Revaluation loss goes to P&L only. If at all I had a revaluation balance over here, then you can take revaluation balance. Balance இல்லையே. எதுமே கொடுக்கலையா அவன்? Do you want a question of AS 19 with revaluation gain 10? Okay. இருந்தா your doubt, Rukmani's doubt. Sir, in this question for this sum, if there is a revaluation gain, then I will not debit P&L, I will debit that reserve. Clear? Are you following, guys? 4 lakhs is not revaluation gain. No, see, it is revaluation gain only. That's why we are deferring, no. Okay. 4 lakhs is not revaluation gain. Sale gain, actual gain. 35 is sold for 39. Okay. See, recording students, if you understood now, okay. Otherwise, special case now. What is special case? Where fair value is less than book value, you pass a normal entry and you find the loss, and then you keep fair value as the base. Fair value base now bring it to fair value and then do the sale. Book value bring to fair value, from there you do sale. That's it. Are you getting it, guys? Fine. So with this, AS 19 is done. Red flags, let me just run through them. Nothing great. What we discussed only. There are 8 indicators. 5 primary, 3 secondary. Clear? Okay. Depreciation is charged in lessee, finance lease, and lessor in case of operating lease. We discussed life of depreciation. We discussed the life is usually life of asset, otherwise lease period if asset is not taken over. Next, incremental borrowing rate is used when IRR is not determinable. Complicated concept, but I'll just quickly tell you. For inter, if IRR is not available, we use another rate called ICB, incremental borrowing rate. What is incremental borrowing rate? It is nothing but rate at which you can borrow similar amount for a similar period for a similar asset. I want loan in SBI. They are not giving. So I'll go to some other nearby bank which gives me loan for similar interest. That's called incremental borrowing rate. Are you following, guys? Question la MCQ ku vanda varum. If IRR is not available, what is the next best option? Incremental borrowing rate. That's it. Okay. When present value of MLP is less than fair value, then record in the books at that value. Whichever is lower. First question, whichever is lower. Economic life is the overall life of the asset. The term economic life, now full life, is greater than useful life. Useful life, now how many years lessee is using. In our operating lease question, 5 years was the economic life, but that fellow used only for 3 years. Clear? Initial direct cost, another theory. When you take lease, lot of documentation work has to be done now. Who has to do all that? CA will charge some fees, bank will charge some fees, All the documentation work, when you take iPhone, அவங்க நிறைய documents EMI ஆனது you should sign. That is called legal fees incurred by lessor or lessee. That can I capitalize? No. Just debit to P&L over the lease term. Amortize the expense as a separate expense. Let's say lease is for 5 years. Initial cost I had 1 lakh for the transaction to take place, brokerage, all of that. Amortize over the lease period. Are you following, guys? That's it. This is AS 19, guys. I think we would have spent almost 3.5 hours. Regular bachelor have gone to almost 4.5, 5. We didn't save so much time, but we saved a percentage of the time, guys. I hope you all understood. Comfortable with AS 19, no? See, 1-2 adjustments ingange irukum. But if you look at all the 5 sums, are you comfortable, guys? Recording, got the confidence. How many of you here never studied AS 19? Now you have confidence in that. Fine. Thank you, guys. Any doubts before we close? Yes, Roshan. Tungita standard give up panta. Recording, don't do that, guys. Send me a thumbs up in WhatsApp once you understand AS 19. Thank you. See, sale and lease back, his doubt is another doubt. Sir, what if sale and lease back 100 leaves and I get it back at 90, you're saying? If it's a loss, prudence concept, if it's a loss, we will fully account in P&L. But generally, sale and lease back, edhuk loss பண்ணுவேன்? I won't do it. But if at all, if at all a loss comes in sale and lease back, take it fully to your P&L. Like how asset, when asset is negative revaluation, asset 100 becomes 90, you take it fully to P&L, no? You take it to P&L. Unless that corresponding asset has a revaluation gain, then I will adjust with that. Got it? Understood, guys? All of you? Clear? With this, we'll be closing AS 19. Anybody else, any other doubts? Feel free to ask. Fine.